All right. Good morning, everyone. Welcome.
Good morning.
My voice is terrible today. How you doing, Josh? Welcome, man.
Not bad.
Happy to have you here.
It's the first time I've been on at the Open, so I'm really excited for this.
It's the first time we're on here together as well, isn't it?
It is. It is. You're right.
Awesome. Well, I'm happy to have you here. It's going to be very interesting to do this live stream and do some live trading here together with you. Usually I'll do this first hour alone, so I'm very happy to have you here because it feels like my voice is going to just crack any minute. So you'll have to be on standby and kind of take over the stream if needed. We got a lot of people tuning in today. Who do we have here in the comments? We got UK Swing Trader as always. Louis, welcome, Louis. We got someone called YouTube. Not sure if that's your real name, but welcome, YouTube as well. Henry, as always, from all the way over from Australia. All right.
Wow.
Where are you from? You're from the UK, right?
I am. Yes.
What time is it at your place now? It's 9:30.
9:30.
Right?
9:36.
Oh, it's early. It's early. Yeah. You don't trade this early, do you? Usually trade
Not
the
typically.
US
Yeah. So I'm typically. Yeah, it's a New York Open, so 2:30 my time onwards, or 1:30 GMT. So yeah, that's my typical session. But I'm open to see what opportunities we've got today. I know that scalping means trades, so if that's what people want to see, then let's see what opportunities we get this morning. If I see anything, I'll execute.
Yeah, we had a conversation, me and Josh, before here, and we're gonna try to kind of like, and this goes for myself as well, because I'm a swing trader. I take only a couple of trades every month, and if I would be trading only those setups here during the live stream, we would mostly be waiting for a new 4-hour candle to form, which is takes a while. So what we've done here is we've set Josh up with a bootcamp evaluation account. I have my high stakes evaluation account that I've been trading here during the live stream, which I'm not gonna lie, it looks horrible. I'm up 0.5%, and I've been up 0.5% what feels like forever. So yeah, it's gonna be interesting to see what we can find here today during the live stream. Let me know, guys, do you have anything specific you guys want me to trade today? I know what the answer is going to be. The answer is going to be gold, but I'm going to ask you anyway if there's anything specific you want me to trade. So Josh, being new here, there's a couple of pairs that the audience kind of always wants us to trade, and one of them is gold. It's either like gold or EUR/USD. Adrian says Bitcoin. Yeah, we're not going to be trading Bitcoin on the 5ers because we don't have the best spreads on Bitcoin when trading intraday. However, long-term positions maybe, but crypto is not our strength here. The 5ers Forex is definitely our strength. Wow, it sounds so bad. I gotta drink some coffee.
The coffee's the way to go this morning.
Yeah, definitely. Right. Okay. Yes, because you're asking so nicely. Maybe I'll take a look at Bitcoin. We got Henry saying AUD CAD is in the 4-hour reload zone, waiting for retest of the 50% fib. Let's go over to AUD CAD right away. God damn it. Sorry, gonna take a break. Just to cough a little bit. There we go.
You're
good. I muted the mic for that one. Because that wouldn't sound very, very nice. Okay, so let's jump right over to AUD CAD. See what we got here on AUD CAD. Okay, so first of all, looking at the 4-hour, I don't know what you're looking at here. I do not know what you're looking at here. This is a downtrend. I see that we're in probably hitting the 50%. We're in the reload zone. You're probably looking for a long here, given the fact that we hit the 0.618. Looking into 1 hour. Yeah, so what I would do here is just I would I don't like this. I don't think this should be a trade for me at all. I feel like it's in a downtrend. The 4 hours in a downtrend. Looking at the daily, we might as well have a a move up at the resistance. Can I have a distribution range, a break and retest of the distribution range lows, and we're moving lower. So the fact that you went along this, I'm not sure exactly what you're put on the indicator. Henry says put on the indicator. Okay, so Henry is one of my biggest fans, and I'm also one of his biggest fans.
Okay. I needed a bit of context there because I was trying to work it all out.
No, it's a shame. We're on the other side of the world, but we have this connection. We have this connection. Okay. Sometimes I have dreams about you, Henry. All trading related. Nothing like that. Just trading related dreams. So Henry's short. Henry is short. I think that's a terrible short. I think that is a terrible short. I think it's a bad long as well.
Brutal.
Yeah, I think it's gonna get stopped out, Henry. All right, let's see. Josh, are you looking at it? Anything? Is there anything that kind of caught your eye here?
Yeah, I'm trying to figure out why I can't seem to get MetaTrader working on Chrome, but I can get it working on Safari because I'm one of the Mac warriors and I didn't download MetaTrader this morning. So I've learned my lesson on that.
Oh, so you have to do it from the from the browser.
Yeah, because I made the decision to switch to Mac from Windows probably a year and a half ago because most of the brokerages or platforms I was trading, mainly TradeAvate and City Index, were both web-based. Well, I know you can download TradeAvate, but I just traded it on web. So I'm just trying to figure out why. But what I can do in the meantime is just pull up my.
So what platform are you usually trading on?
So if I'm trading CFDs, I'm trading City Index. That's the main brokerage that I trade. But they run TradingView charts anyway, so they integrate TradingView. But other than that, I trade TradeAvate if I'm looking at futures markets. So MetaTrader 5, I don't think I've ever traded it seriously, but I remember I used to have it for. Can't remember when I used to trade it. But we will fix it. I think I can just share my screen across.
Yeah, no worries, man. You can set that up, and I can do some analysis. I do have a chart request from someone who shall not be named, because if I do, I'll be in trouble. You all know who it is. Okay, so let's take a look at USD CAD. USD CAD. So this is, I think this is very interesting, but given the fact that I wish we had LJ here who could kind of like describe the whole fundamentals, the macro thing on this. I would like to think that I'm good at macro, but I'm really not. When it comes to fundamentals, some days I wake up and I feel like I've been watching Bloomberg, in the morning, and I feel like I know everything about the market. I go into our WhatsApp chat that I have, and I ask LJ a question about this, and he's like, "You're completely wrong. This is the way it is." So, yeah, not the best of fundamentals, but we do have a scenario right now in the markets where the dollar's weak. Okay, the dollar's weak, and we actually have a scenario where we could be seeing a completely new cycle for the dollar. We see that some of the USD pairs are entering territories that we have not been trading in 3, 4, even 5 years, and we're seeing a potential cyclical shift with the tariffs and everything that's going on with the divergence between the Fed and the other central banks and all of that. So if it weren't for that, then I would say absolutely 100% USD CAD from higher timeframes would be, very long. I would love to be able to buy this. But now the weakness that we're seeing in the dollar doesn't really support that, and I'm not really sure I want to be building positions here. You can also see on the daily that we had a first move down into the support zone, a confirmation of this being support with that trend line, price breaking to the upside. But then we got rejected up here and went all the way back, and we took out that accumulation range, and we're not trading at the very lows. So from a swing trading perspective, not interested to long this, also not interested to short because we're at technical support. The thing is, though, intraday, it becomes interesting, because given the fact that we are at that support level, chances are that support is going to be acting as support like it usually does. And we're at the very lows of this support zone. And if you go back to look at the historic prices, or well, not very historic, in the beginning of May here, but if we go to the left here, we do see that we have a level here, and we have some type of double bottom structure being printed here. So what I've been watching on USD CAD is, if we can get above this level, that resistance zone right there can go even into the lower time frames. I can switch that zone to make it visible on the lower time frames as well. So go down to the 50-minute. If we break this level, I think a move up to perhaps this area would make sense. So something like this, I would be watching on USD CAD. So I'm going to be putting in an alert right here on that one, right there. Okay, yeah, that makes sense on USD CAD. Let me take a copy of this one, send it over to the person that did request that one.
Right, I think
Comes
I
again.
am. I think I'm set up.
All right.
I don't want to jinx myself, but
Let's see.
I'm just going to share the different window. So give me a second. I'll just showcase what I'm looking at on TradingView first, and if I see a setup, I'll take it on MetaTrader. So let me just flick across. I'm running two browsers at the moment, which is probably not the best, but there you go. Tuesday morning, that's how it goes. Window. See, I just had it. Right.
So if there's any issues, sharing MetaTrader on the browser or whatever, it doesn't really matter. You can share TradingView as well. I mean, it's not
Let me just share. I'll share TradingView for just this.
Yeah, share TradingView. I mean, you're probably more comfortable with TradingView if you haven't used MetaTrader in the years.
Still learning the ways of it.
Yeah, let's not use MetaTrader if you're not familiar with the platform.
Let me know what I'm on.
All right, I'm gonna add you right now. So I looked at the live stream yesterday, right? And you're trading not NASDAQ. What is the NASDAQ? Yep. Did you trade NASDAQ?
I do. Yes, I did. Yesterday, I was showing the live yesterday from sort of 230, 245. We saw that massive move up, 150 points, literally no pullback, straight at the open. We saw a massive push. And then what I was talking about with the stream was, I'm waiting for a retracement, because for me, this isn't a continuation. I'm not looking to buy this, because I could be buying and then we absolutely dump with no real knowledge and no real backing in the system that I'm trading. So unfortunately, we didn't see much in that point, because the stream ended 15 minutes after that. So, but I did end up taking a couple of scalps once we'd retraced it. So once we come back into that lower range, I was very much trying to be patient and waiting for that retracement back down. Because when we're in slow grind days where we're not getting many pullbacks and we're just literally just going for the skies, it's hard for me to find an entry. And often what I found myself doing in my trading is trying to chase it. It's easy to get into that mentality as a scalper. So for me, I'm very much like, okay, I'm going to sit back and wait and just see how the market plays out. Today, obviously, I'm approaching the market at a different time. Obviously, we had London open an hour and 40 whatever minutes ago. For me, obviously, let's refer to the 4-hour chart just briefly. Obviously, 5 minutes more for scalping, but we'll get rid of that for a second. We're obviously seeing we're in this interesting position where, for me, I'm interested in seeing a run of this 350 level. We didn't run it, and then we've rejected it by sort of 40 points. I'd like to see a continuation lower. I think that's realistic. Whether we go down into the sort of this 250s area, that's of interest to me. So we may get that in New York, but right now I'd be looking to see if we've got the volatility to run this sort of 358 level. It's sort of a bit spooky for me because we literally maybe hit it to the tick. I don't typically like price action like that because I feel like it's still quite undecided, and I want to see a follow through with it. But yeah, we're at an interesting point. Maybe a sell area around 425s with a stop at 437 to see if we bounce up to here, reject this level, this wick here from Monday at 8 o'clock, and then have a continuation lower. That could be an interesting trade. But let's see. I mean, the 5-minute chart, in my opinion, right now is looking pretty gross. We're not seeing a huge amount of anything. I could see us breaking up through 400s again, but again, that's only like a 7-8 point move. So I'd rather see a run of these lows, but we're very much sat in this sort of downtrend, which makes it difficult. But I'd like to, short term, I can see us breaking 410, 413 before running the 350s low. But I'm waiting for a breakout and a bit more continuation in either direction right now.
You said yesterday we had that big breakout move yesterday, and you kind of you wanted to wait and you want to be patient to see where that move is. So you're not a breakout trader. You're more of a, would you say that you're more of a break and retest trader? Because
I'm taking wick tests. So for those who aren't familiar with that, a wick test is price makes a move higher, say, and then it comes down into and retests the prior high of the previous candle. So they're the sort of trades I'm looking for. For that, we sort of rely on some form of trend, but I'm looking for trends with pullbacks that are easier to get into, because what I found is I struggled to get into those big moves. Hence why I was waiting for yesterday. I was waiting for that rejection or a retracement back down, because we just had a very strong move. But yeah, I think what I'm really looking for is those wick tests. But I do look at the 4-hour chart as well for those who haven't understood my strategy yet. I'm looking at a 4-hour for those key areas of support and resistance, because I mark those out on my chart, and then I have an understanding and a bit of confluence going into the session, because I'm like, okay, these key areas on the chart for me on the higher time frames could act as strong support and resistance. So maybe I should be looking to place trades around these areas. It just gives me a bit more confidence in my scalping, because I'm in trades for such a short period of time, and I'm usually only targeting sort of 10 to 15 points on the NASDAQ, which can happen instantaneously during most volatility. I just need as much confidence in the probability of that setup as possible. So looking at the higher time frame for that support and resistance just helps me sort of get a bit more confident with the setup.
I'd love to understand more about the wick test, because that is a concept that is I don't think that the concept is new to me, but I think the phrasing of it might be slightly new to me. So when you say a wick test, is that a retest of a previous?
Let me try and find.
Yeah, so maybe you can.
Let's have a look.
Maybe it shows like what would be a wick test on the chart. Is it a retest of a breakout level, or is it a retest of a?
Typically, the wick tests, what I've found is they work best on the 5-minute chart. It's difficult because we have just sat in a. Let's go back to yesterday. See if there's any clear examples that I can see. We had a fairly interesting.
Yeah, so the trades that you took yesterday, maybe you could kind of like use them as an example to sort of.
Yeah, so the trades I really took yesterday weren't wick tests in the truest format, because I took obviously we made that massive move higher. Is that right, or is that?
I think that's the one. Yeah.
Oh. This is market open here. This is market open. It just looks smaller on the chart when I've got it like this. No, I ended up taking a long. Where are we? This doesn't.
Sometimes it's. You go back in the charts and you can't really find.
I'm looking back and I'm going, this is not. Let me try and find a good example. It's where prices like a typical wick test, because I thought we got a much larger move, but this was. What was the news
maybe
it's
a difference. Are you looking at the broker chart that you're using in your live trading? maybe there's a difference in the data
There may
feed
well
between.
be. Okay, well in that case, there may well be. Let me have a look at. Let's just try and find a clear example here of a wick test. Otherwise, I'll try and do my drawing skills and draw something out for you. This is interesting. We nearly made the cut. Okay, so a good example which I could give just based off the most recent charts. It didn't quite play out, but it could have been interesting. So notice how here we see a wick, right? A wick here. Typically, what I'm looking for on the 5-minute chart is 50% retracement of the prior candle. So we make a move higher. And then what I'm looking for here, so we see this wick, we made the move higher. This candle here, I would have been interested to see if we'd come down into this wick. So that would have been a wick test for me because I wanted to see a price move higher and then it come down into this level, retrace, bounce off this area of support, which is the wick test, and then make a move higher. We didn't quite make it here. We missed it by sort of 3 points, but the idea is still the same because we rejected, whether we rejected off a slightly different level across. No, not really. I think maybe price just didn't manage to get there. But
So,
what I'd be looking for
before we move on, like I have to ask because I kind of forget. Otherwise, I'm terribly sorry to interrupt you. But I'm looking at the 5-minute right now. So now this makes sense, right? Because you have the blue level right there and the wick that is testing that level prior to the breakout. So you have now that is what we'd like to call like a naked level or an untested level, right? Where you have a breakout. Breaks above the level is an untested breakout level on the 5 minutes. So you're basically looking for a breakout move, and then you're looking to go long on the first retest of the breakout area, which in this case is the wick. Now, the question is, what I'm interested in is, what do you place limit orders on the blue line, or do you wait for price to come down and then market enter based on some sort of confirmation?
Yeah, so typically I'll market into a trade because when I'm scalping, I just want to have the most precise, up-to-date entry. And for me, I've just found that marketing into trades is a good way of me just making that decision there and then. Someone put in the chat just briefly, 10 to 15 points with a 2.4 point spread is crazy. I don't typically scalp the market at this time. We don't have a 2.4 point spread at market open. So hopefully that gives you a bit of clarity because I'm not trading typically the same scalping strategy that you might see this morning at this time. So yeah, for me, the first test is the best test. If we've missed it, you know, what I've seen, sometimes you see a wick and it runs and it misses it by a few points. So there is a good example. We missed it by a few points. We made a move higher. We then saw this candle come back down to the same level. We didn't end up breaking it. But had we come down here and this candle and hit the level, it wouldn't have been a trade for me because I want to see that trade happen on that first candle of the first test. If I don't get in at the first test, the trade is invalidated for me because I'm trying to be so precise with my scalping strategy. I'd rather wait for the next opportunity than try and take a trade that I know isn't the same quality as it was the first time round. So yeah, I mean, this volatility is very abnormal to me because NASDAQ market open, you know, sort of 245 or 145 GMT onwards, we're seeing sort of, I mean, yesterday we saw a lot of volatility. So if we see a setup here, I'll sort of give a demonstration of what that trade looks like. But yeah, volatility, typically for me, I don't like to trade a scalping strategy under, you know, if it's under 15 points a candle. That's sort of what I've found because my mental focus, if I'm in a trade in low volatility as a scalper, I'm used to that sort of level of intensity of a scalping strategy of like being in trades, getting out of trades quickly. So for me, if I'm in low volatility, I find it hard to manage that trade in the same way because it's just a different environment. But yeah, I mean, it would be interesting to see if we do get that continuation lower on the 4 hour. I'm still looking for that area to get retested. But maybe a quick rejection off of 428 level. It's a fairly tight stop. Again, maybe good for 10, 15 points. Let's see.
What's the when you're like that you're looking for small moves in the NASDAQ, and the fact that the spreads might not be I don't know where you're trading, if you're trading with a prop firm or just your personal capital, but usually what I see is at least with the fivers, commission free trading on NASDAQ, but that means that the spread is slightly wider than the major forex pairs, right? So scalping on the NASDAQ is works well sometimes when you have volatility because of it's commission free.
Yeah.
But do you see any issues when you're scalping with the commissions? Like is that something that you take into consideration if you're looking for just a small
Not really.
move, right?
Yeah.
So what?
It doesn't
Because it means
typically make a
scalping and
huge difference.
yeah, because scalping, like it is the most inefficient way of trading, basically, because of the problems that we have with the spreads and commission.
Yeah, so typically it doesn't really bother me because the way I've approached it, obviously with scalping, your fees are always going to be higher, and the way I just treat it is the cost of doing business. For me, I've not encountered issues. If I'm going for a 15-point move, if I lose a couple of points in spreads, it is what it is. I don't pay a huge amount of attention to it. I'm not overly concerned by it. So it's not a huge concern. But I can understand with different brokerages, different prop firms, it may be a different scenario. But yeah, it comes down to your approach and who you're trading with.
So I'm looking at NASDAQ here on the 4 hour, and we do have a I guess we do have a break and retest of a of a wick, or does it have to be the let me pull up my screen here, because I do kind of start to see what you mean here. Do you care about do you care about this wick, or do you care about that wick? So is it a previous candle, or can it be a couple of candles?
Yeah, so on the 4 hour chart, it can be a few candles back, because the 4 hour chart is often stronger support and resistance, obviously, because it's judged off a higher time frame. So with the 5 minute, a wick test for me is really only the previous candle, or maybe one candle before that, or a strong area where I'm convinced and I've got conviction that we'll get a bounce of 10 to 15 points. That simply comes down to the sample size of my trading and just knowing how the market responds in different areas. On the 4 hour chart, the candle could be 5 candles back, or it may be a level that we've retested a few times. We often see market comes back into a high that we may have struggled to get through a few times, and it's like a 3 wick retest. That's also an option for me. But I'm not looking necessarily at just the candle before on the 4 hour, because the 4 hour gives me a larger sample size and a larger time.
But we have a breakout on USD CHF. I gotta take that trade. So just looking at USD CHF, we do have a breakout right now. God damn it, I'm way too slow on this. I didn't even have USD CHF up, but that's a breakout that I'm gonna be joining. Where is USD CHF? I have my MetaTrader just completely set up the wrong way. Okay, USD CHF. Let me share it right here with you guys. So what we got right here is USD CHF. Switching to the main template right here. So okay, so the obviously it's moving now, and that's because we got the inflation numbers, the Eurozone CPI, I assume. Let's take a look at what we have in terms of the news, what numbers we had. Okay, so Eurozone CPI year-to-year flash actual 1.9, forecast 2%, which means we are 0.1% lower than forecasted. So the numbers are unexpected, but not any serious change. So what I'm going to do here is I'm going to start opening a position on USD CHF. We have a pullback. Going to have my stop down here. How much I'm going to be risking on this one? 1% is 2. So let's build a position of 50. So start with 0.25. USD CHF. This is all right. So we're going long here on USD CHF. Gonna switch that. So I got MetaTrader obviously on my right screen here, and I got trading view here on my left screen, so I'm monitoring both of this market. So what I do on a MetaTrader here is I got it on the 1 minute. I put the TP in here as well as we're watching this, price starts flying. So where is the TP on this one? I'm just looking for a small move up towards probably this area up here. Now, if I pull back, I'll probably add a bit. I mean, I would love to, if you can put in a pending order here, an entry. Okay, so I should have my stop loss down here, but I want my, why can't I move that one? Okay, so I gotta move the entry down. What is that? 81, 80, 81, 80, 90. Okay, 80, 81, 80, 90. That would be my limit order. I'll put my stop loss here. How much am I going to be risking on this one? 0.24. All right, so I got another order in here. I also have one open on GBP, JPY, but that's more of a long-term swing trade type of trade. But you can see right here, I got the market order here, looking to get in on the volatility that we're seeing right now, looking for that move to take us higher. If we do retrace, I'm going to get filled on another 0.25%. This position, tight stop loss based on the latest swing low on the 1 minute before the breakout. All right, let's see what we're getting right here. Let me know in the comments if you, you know what? I'm going to do a poll here in the comments. I'm going to see what the percentage are of you who think I'm going to get stopped out or not. So go into the comment section. Will Jonatan get stopped out or not? Simple yes or no. Go into the comment section. Answer yes or no right now. See what we get. So we got some volatility here. Now, obviously because of the news event. And as you know, I'm trading on the high stakes account, which, the rule is no trading 2 minutes before or no trading 2 minutes after the event. So there's a 4-minute window. Now I did execute this trade right outside of that window. Okay, we got now we got
you've put them both
100% saying no right now. 100% of people saying no. I'm not gonna get stopped out. Thank you for that vote of confidence. Okay, we're
people don't really have an option, Jonatan. They both say no.
Oh, you think? No, I don't know, man. I don't know.
People have to guess.
ML. The way I trade, getting stopped out is not. It's not an option. It's not an option.
Yeah, so I just want to go back to a question that someone asked in the chat. How many trades is enough to say one strategy works? That is a very subjective question because I think it depends on the typical trades that you're taking. As a swing trader, the sample size relative to the time frame is going to be significantly less than me, say as a scalper, because Jonatan as a swing trader might only take 2 or 3 trades a month. Well, I take 2 or 3 trades a day. So the sample size, it's going to take Jonatan a lot longer to take 100 trades than it's going to take me to take 100 trades. So I think what you've got to understand is the type of strategy that you're trading, how long you've already been trading for. If you have any data, whether it's been on a brokerage or an evaluation, what is the data around what number of trades you typically take in a day? And then you go, okay, over the last month or 2 months that I've been trading this account, first of all, make sure that you're trading a demo as you would a live trade, so that that initial data is as accurate and relevant as possible. Because a lot of traders, they just take hit and miss trades everywhere on demo, and I think it's important that you want your data to be as accurate as possible from day one. So my advice to you would be understand from the data you've already got what number of trades are you typically taking across any given time period, and then you can almost extrapolate that to say, okay, I need to have a really concrete set of results. So maybe I want to take 20 times the number of trades that I've currently got as a sample size, just to, I always say that 2 to 3 months worth of data is good for a beginner because it just allows you to understand whether month 1 has been a complete fluke or if you can actually get continuation of your strategy. So yeah, I think it's subject to the type of strategy you're trading. If you're a scalper, then your sample size is going to be much greater. And if you're a swing trader, your sample size is going to is going to be slightly different. So I think it's all about.
But I mean, I would say 200. I would say either if you're a scalper or a swing trader, 200. I mean,
what's that based on for you? What have you found? What's that number centered around?
So based on statistics, right? You need a high of enough of a high number, and I think a general idea is that 200 is a good number that gives you an indication of edge. We could look at it this way: 10 trades doesn't really tell you much. If 50, not really. You look at 100. Well, if you get up to the number of 100, you can kind of start to get a feeling for the edge. The more numbers, the better, because looking at the law of big numbers, if you have 10,000 trades, then you can look at that data and you could say that you have statistical probability and predictability on the outcome of a specific system over 10,000 trades. That's a huge amount of number. A huge number of trades, and it gives you an indication of where the edge of the system is. So the more numbers, the better. But then you kind of have to get you have to come to a number where it's realistic. And for me, 200 is a good number. I've seen 200 as the minimal benchmark of testing for any type of system, being scalping or swing trading. Now, of course, 200 trades. Let's say you're a swing trader and you're taking 2 trades a month. I mean, that's going to be 24 trades a year, and it's going to be almost 10 years for you to get up to that number. After 10 years, you have 240 trades. But we're not talking about forward trading, right? We're talking about back testing. So before you even go live with a system, you obviously need to have the back testing data to back it up. And in that sense, I think 200 is the minimal required amount of trade that you should look at. And again, the more the better. So when I'm back testing and when I'm, when I got my back testing template and everything, before I even evaluate the profitability of a system, I need to make sure that I get 200 trades into the template before I look at the the statistical probability of what I'm actually testing. So I guess there's a difference in back testing and forward testing, of course, because as a scalper, if you're taking 10 trades a day or whatever, we have a lot of people taking many more trades than that. But then you can look at your back testing data, and then if you get good numbers on your forward testing, you compare the two, right? But in swing trading, you have to more rely on your back testing data. You have to trust that future patterns will repeat itself over time. But with scalping, you can kind of return, you can see it in real time if it's actually true. So that's one of the advantages, I would say, in scalping. But then again, I would say that you have the right tools, the right software to get at the statistics and back testing, then it shouldn't really be a problem.
Yeah, no, I agree with that.
Okay, looks like I'm losing money on USD CHF. Not going to be adding to this trade. Hopefully the breakout that we saw, I mean, most of the time these breakouts are going to be fake outs. So the win rate on these trades as breakout trades are going to be very low. I mean, we know that people like Peter Brandt, a very known trader, a market wizard, he has like a win rate on this breakout trading of like 20% or something like that. But the ones that run, the return of risk is so high that the low win rate of the breakout trades kind of make it worthwhile. So looking at a breakout system like this compared to a trend following system, you guys know the trend following system that I've been showing you guys with the EMAs and everything that has around 60% win rate. I would say a breakout system like this, which if I'm going to be honest, I obviously have not tested this in within the big numbers, but I would look at this and say like probably closer to 25-30% win rate on something like this. And then you can look at the risk to reward of this. It's not a very high risk to reward. It's probably like 2. So The question is then, like, is it worth taking 2-hour trades if the win rate is that low? And that's obviously something that you got to be testing, looking at the data and do some testing on. But I think it's also important that. No, go ahead.
I was just interested, as a swing trader, what's your sort of typical trade duration? What does it typically look like for you? So you say you take 2 to 3 trades a month. What does that look like in terms of time?
Let me see. I can look up the numbers. I'm actually not journaling too much this
because I'm just I'm trying to work it out, because my initial sort of, for those who know, obviously I learned from my stepfather, who does a bit of everything. He was a day trader sort of, but he does a lot of swing trading, and he continues to do it. And I'm just trying to like understand, if for you, is there like a limit? I suppose my follow-up question to it is there a limit to how long you want to hold a trade for, or are you setting it and going, it either hits TP or SL, or what does that look like for you? Is there a time at which you say, I don't want to hold a trade much longer than this because I feel like or are you purely waiting for the trade to play out?
So I'm a trend follower. So, well, actually, not purely trend following. Well, I would say that I'm purely trend following, but there is a component of mean reversion when if I look at the weekly, I see that okay, price is in a high time frame range. We can look at an example. So we can look at a example, and I can also update the viewers on those trades. Okay, so let me just look at USD Sheffield, see if I need to do any bit of management. Okay, let's switch over to trading view, and I can share you some examples of a recent trade. So for me, I mean, of course, I am very aware of the issues that we have with swing trading when it comes to time. The timing aspect is a big issue. You know, the longer you stay in a trade, the bigger the risk is. The bigger the risk is of whatever. I mean, you can have you're holding trades over the weekend. I mean, Trump comes out, tweets something. You have the Russia-Ukraine situation, whatever. Like a lot of things can happen while you're in the trade. So that's a real danger of swing trading, the timing aspect. But when it comes to holding periods, it can be a couple of hours to a couple of weeks. Couple of days, sometimes even a few weeks. Now, when I'm holding something for a few weeks, the swaps and everything could become a problem if price is too stagnant. So if I see that I'm entering a trade, I think a good example, a trade that I took recently could be like USD JPY. So this is where the idea of high time frame mean reversion is combined with swing trading. So obviously you have a range here, right? So USD JPY have 1, 2, 3 tests. The first time being in 2023, second in 2022, and now in 2025. So I'm looking at this and I'm thinking, okay, this to me is, I'm looking at a market that likes to bounce here and move back to the mid range or the range equilibrium. So I would be looking for longs. Now, obviously, I don't know how long it's going to take for price to come from this level up to here. I can look at what the probability is of a certain number of days, because, you know, looking at how long it has taken price to move up to this area in the past. But looking at this from a mean reversion point of view, I would be interested in going long here. And then looking at the 4-hour or even the daily, I would be looking for a break, like a bullish trend or a break of structure. So what you have here is a high. That's actually a lower high compared to that high. So that's a lower high, but then you have a higher low and then a higher high compared to that high, and then you have a retest of this level. So a trade that I took was entering here and then having my stops down here, and I was looking for a TP up here. I remember closing the trade somewhere around here. Maybe I had my stop loss in profit, something like that. But I'm just following price. So it could be like in this case, USD JPY went from that level up to that high in 1, 2, 3, 4, like 5 days. Could have taken 2 weeks as well. So for me, I don't really have any rules of how long I should be holding a trade. It's just about following price, whatever price is doing, I will be following that trend and trying to manage my risk accordingly within the trend. But of course, looking at the statistics, there are of course numbers to my average holding time. So looking at the statistics, it's around 12 hours on average. So my holding time is around 12 hours on average. But that's a big span. Could be 2 weeks or could be 2 hours.
Yeah, that's interesting. Yeah, because the point I was getting at, I think I briefly covered it yesterday with a few people. I went from like one end of the spectrum. When I was initially learning how to trade, I was, I suppose, swing trading to some extent. The problem is I didn't enjoy holding trades overnight because I didn't like that sort of market close, no control over the trade whatsoever. Go to bed, come the next morning, something could have happened, and I'm helpless because I'm at the mercy of market open with my trade. And I also didn't enjoy weekends. I mean, weekends are even worse because it was a 2-day period of no markets, and then Sunday night you're waiting for market open. So I went drastically from one end of the spectrum to the other. I suppose again it just comes down to your sort of personality as a trader. It's about getting comfortable with the way you're trading. But I just went from one end to the other. So I was just interested to know sort of what your approach with it is, because especially now we're seeing that there's so much potential uncertainty in the markets with anyone saying anything remotely controversial, or and it can create an environment that's quite difficult to trade because it feels like everyone's sort of on edge waiting for the next tweet or the next comment, or we're in such an uncertain time at the moment. So yeah, I was just interested to know from a swing trader, from your perspective, the sort of approach, because we don't know. We've seen in the last 2 or 3 months, or really since the start of the year, we've seen the power of social media and comments and fake news and all these sorts of things, where there can just be comments made with no credibility, and all of a sudden the market goes into a complete frenzy. So yeah, it's interesting.
Yeah. So I'm of the opinion that the primary trend is, as long as I'm following the primary trend, of course if on the weekend there's a big happening, like a big macro event, or if there's like some, I'm not gonna say black swan, but something that really shakes up the whole macro environment and geopolitical tension or whatever, I'm of the idea that regardless of these events, price will follow that primary trend until it's the end of that primary trend. Now, of course, we can have a catalyst like Trump coming up with the tariffs that completely changes the overall primary trend, and then I'd be happy to get stopped out. Yeah. And hopefully that is the end of that trend. But I try to ignore the intraday noise, and for me, sometimes everything that's below the daily time frame to me is sort of intraday noise. So I'm trying to always understand what happens on the monthly, weekly, and daily, and what is the cyclical nature of the forex pair that I'm watching. So if we look at, for example, USD JPY, we'll look at USD JPY, and we could assume that let's remove that one. Okay, so we could assume here that if we look at USD JPY, we have a behavior that tells us that we're in a sort of a specific cycle for USD JPY. I'm not going to go like in great detail here, but we have, looking at the green lines here, we have sort of a uptrend, break below this trend line, sort of breaks the uptrend, gives us some kind of signal on something changing. But this level, the range lows, is holding strong. But there are some changes here to the overall structure. We see that there's a V recovery this time on test number 1. On test number 2, we have a V recovery. On test number 3, we have a double bottom. And most of the time, a double bottom is a bullish structure. But it's very important that we take all of these patterns and everything into the context of the bigger picture. And in the context of the bigger picture, the fact that price created a double bottom here is a show of weakness, especially given the fact that we broke the range EQ. We had a bearish rejection of the range EQ from the downside. The weekly moving averages have had a bear cross for the first time in many years. If we ignore this and we kind of view this as a fake out, that has not happened since the beginning of 2021. So there is some change in the overall typical cycle for USD. USD JPY. And given the fact that with the new tariffs and everything that's going on with global trade tension, and I remember my watch is trying to talk to me. I remember an interview on Bloomberg. Howard Marks came on, talked about his book, Mastering the Market Cycles, and he talked about how we're potentially entering a completely new paradigm shift, right, with the dollar. So what I'm looking here for USD JPY is like maybe the primary trend is ending here. So we can look at that's primary uptrend, primary downtrend, primary uptrend, primary downtrend, and I wanna trade these trends based on the daily, right? And everything lower than the daily is just intraday fluctuations. It's a lot of times the events that happen on a weekend will not completely destroy a trend like this unless it's something major. So if I have my stop losses based on this trend, then the information most likely will be absorbed unless it's a complete break of the primary cycles. So looking at USD JPY right now, if this level breaks to the downside, I would think that this is the new primary trend. So if I extend, that trend line to the downside, something like this, I would be looking for a short. Instead of going long here, I would be looking for a short, and I would look at this as an opportunity for USD JPY to perhaps enter a previous range or a previous cycle that we have not been trading in since around the beginning of 2023. Hopefully that makes sense. And if I'm going to be honest, I am not even sure what the question was.
Whatever, I can't remember either. Anyway, just briefly, if we want to go back to my chart quickly, just to go back to NASDAQ. It was quite interesting from what I've just been watching. If I want to share my screen, let me know when I'm on.
Yeah, I'm going to add it.
Okay, so it seems like the typical morning NASDAQ has striked again. Obviously, I'd marked out this level at 389. We were briefly talking about it, and we'd seen price make this pretty sizable move relative to how we've currently been moving, and we've missed it by not even a point, like maybe just over a point. And I was looking for a long here because, again, we talked about fake outs, and people go, "Oh, look, it's just broken that low. It's a sell side move." No, not quite. So I was really interested. I was really hoping that I could finally get a trade on stream for you all at 389, and we bounced. We bounced within a point, and that's a bit annoying because often what I try and do in the live session is I might end up front running a trade by a bit because you end up in situations like that where you miss the trade by a point. And I'd rather get a point worse entry, but a higher chance of me getting into the trade. So it's a bit of a shame that we didn't get that, but it would have played out all right. And again, then I was looking at that 428 level, hoping we might have had a bit of continuation up, but it just feels very choppy for me at the moment. We're sort of not decided yet on the move that we want to make. So yeah, we may end up clearing out these lows at 380s, 390s. But yeah, unfortunately.
So what's the reason? What's the reason for you to miss that trade? I mean, is it just because it did not hit that level?
Yeah,
exactly.
See, in this volatility, I'd rather not be front running trades because we weren't volatile enough for me to want to be a bit more flexible with my entry. So I was really looking for as precise an entry as possible, which meant coming down into that 389, 50 level, which we didn't get, which is unfortunate because I thought the idea could play out, but we didn't. I don't.
But what if so? But so have you looked at the statistics of like actually front running? Because what we're seeing here is the level is pretty much being hit. I mean, it's such a small difference. Then I would view this as okay, the level has been hit. So, but you would want price to hit the blue line, and
yeah,
as soon as it hits the blue line, you enter at market.
Yeah, to be honest, I think it purely comes down to that scalping nature that I've got, that I'm looking for precision. So for me, that confirmation in my mind, because I don't have a lot of other variables when I'm trading, like I don't have indicators, my chart is pretty bare and I'm looking just at price action. I want to get the best entry possible. And especially when we've got decreased volatility and I'm not trading my typical session, I feel like it's even more a reason for me to want to be as accurate as possible. So yeah, potentially maybe a miscalculation at my end. Probably should have marketed in, but I didn't, and I accept accountability for that. But yeah, I suppose it does just come down to wanting to be as accurate as possible. We didn't get it, so we didn't. It's as simple as that.
Yeah. No, definitely.
I think it's definitely food for thought if I do start looking at the markets at this time, or at least pre-open, maybe trying to adjust to how we're moving. Potentially that should be something that I'm doing, because I don't typically look at the markets at this time, because I try to come into the markets with no bias, because it's not beneficial to me as a scalper, because I'm looking to take such small price movements. I could take a long when we're selling off. It's just about, am I going to get a bounce of 10 to 15 points? Because I can still be wrong on the move. So again, it comes down to the fact that there are so many opportunities as a scalper, and if I miss that trade, okay, but there's going to be future trades. So yeah, I think
patience is definitely important. Discipline is discipline, patient. It's definitely important. So speaking of discipline and patience, I just got stopped out on the USD CHF trade. But you know what? I still like what I'm seeing here. So I'm going to switch over to MetaTrader here quickly and show you guys what I'm watching. Let me also, I think we are supposed to have Pedro coming in here soon. Let's see, where is that? Yeah, it's probably gonna come in here in just a bit. Okay, so, and then we have Victor as well coming up for some live trading. And we have a question here quickly. I don't really know what you mean by this, but what you can do is just go into go on the website and hit up support. They'll help you out with this for sure. So this is something that you can support. Pedro, what type of background is that? Is that your real background?
No, I want to see this now.
You're on vacation, aren't you? Well, I'm pretty sure he can add himself. You look very smart. You have a lot of books in the background. That's a trick, You see people, they have a book. What is it? What is it called? The thing you have books
Bookshelf?
in. Bookshelf. Yeah. Have a bookshelf in the background, and it's like, look at me, I'm smart. Is that a fake background? Is that the actual background? That's a fake background. I can see your forehead. That's not real. No, is it real?
Where's the green screen?
It is real. Of course, it's real, man.
It's your real background.
It is my real background. This is like, I'm in my parents' house.
Okay, so they're the smart ones, not you.
Yeah. No, but this is the kids version, okay? Because my dad was addicted to books, so actually downstairs there's kind of a proper bookshelf with proper books.
All right,
this is
nice.
more pencils and cartoon books and whatever. I didn't even look at it. This is kind of my.
Before I go, Pedro, what's the weather like? Not to make me feel any more depressed, but it's grey and rainy in England today. So what's the contrast?
Yeah, it's a bit windy. I think it's going to get a bit better in the next few days. I hope so. That's why I came here, just to enjoy, to go to the beach and whatever. But yeah, it's a bit windy. Yesterday the pilot was aggressive when we landed the plane. To be honest.
Aggressive? What do you mean aggressive?
Yeah, it was not smooth. Let's just call it like that. It was not a smooth landing.
Okay.
It was kind of, I think it was in a rush or something. I don't know. But yeah, it is what it is.
It's like someone's afraid of flying, I think.
Yeah.
Yeah, but that's it. So I haven't looked at the market, so basically that's what I'm going to do today. I haven't really looked any analysis over the weekend, so I have no idea what's going on. So basically that's what we're going to be doing here.
Okay, I'm going back in on USD because someone threatened me in private.
Well, I'm going to stick around for a little bit because I'm conscious that I want to see this, try and see this 428 levels play.
All right.
So I'll stick around for another 10-15 minutes to see if we do get that level. But right now, NASDAQ's still pretty undecided. It just seems like we just get a move to the upside and then straight rejection back again. So I'm waiting for a clear breakout if there's any potential entries, but we're still 20 points off. So let's see.
All right, I'm long USD again. Let's see. I think we're gonna get continuation to that. What do you think, Pedro? Could you?
You tell me what you guys are looking at. I have no idea. What pairs are you looking at? Is just
right now I'm
NASDAQ at this time of the day?
Well, right now I'm long USD because Alex told me to, and it's looking good. Looks like I'm making some money here. Okay. Okay, let me switch over to MetaTrader here.
Pedro, to answer your question, no, I'm not really scalping it, but I have a boot camp account. So if I'm going to be placing trades, I'm not going to be placing trades live because obviously I've got to stay disciplined with my full strategy to the fullest extent, which is trading New York Open. But if I see any opportunities, if I'm on lives beforehand or whatever, I will execute.
Perfect.
Okay, we're moving lower on USD. Okay, so the idea here is that I want USD CHF to use this level that we have right here as support and continue what I believe could be a breakout move. The thing is, though, with USD CHF, it's incredibly bearish on the higher time frames. And I get definitely got I like it. I quite like it. Been stopped out twice though, so let's hope this is a winner. Look at the history here. How much have I been? Yeah, look at the USD-JPY. That's a big loser right there. A lot of these trades are actually from the automated trading, the EAs, and every single one of these NAS 100 trades are on the EA with the automated trading. And the thing is, the account that I'm trading 100% automatically is way more profitable than the one I'm doing discretionary, which tells you quite a lot about my discretionary trading skills. Interesting. I think when you remove the emotions from trading, it's so much simpler. So much simpler.
Yeah, that's
Jonatan. Abdullah is full of confidence in your trading ability. He says,
"Sorry, what?
Your UJ will hit stop loss, Jonatan."
Oh yeah, it's. Oh, okay. Well, yeah, well, this guy, he's like, you never know. Some days he's very nice. Some days he's like not very nice. Like these types of comments have no place in here. The EA name, it's not as like it's an EA that I created on my own. Very proud of that, my little baby. Then don't ask me to share it because if you have an edge that's as good as this EA, then you don't want to share it. I'm sorry, guys, but everything's not shareable. I'm making money on USD CHF. That's looks good. Nice. I have a deposit address for Bitcoin. So if you did take this trade and you did make some money on this trade, we do have a deposit address for Bitcoin. You can just go in there and deposit whatever 25% of what you're making on this one.
That's massive a joke QR code on the screen for everyone.
Yeah. Yeah, no, don't like we don't have anything like that. We don't provide. You're not supposed to follow our trades here. This is not financial advice. This is strictly for informational and entertaining purposes. Yeah, I think that's right.
Yeah.
Well, Pedro, you're
Congratulations,
very
TMD.
talkative
Let's see
today.
if that thread goes.
Sorry, what?
Yeah. Let's see if that thread. I was looking at your trade. I don't know if you can hear me, if there is any lag. If there is any lag, I'm sorry.
There is some lag, but yeah, I can hear you.
Thank you.
Well, it did look good, but now it's like it's rejecting. I wonder how he makes money trading this way. This is absolutely ridiculous. Like how is he even able to be profitable taking these terrible trade? I mean, look at the 4 hour. Look at the 4 hour. This is a break and retest on the 4 hour. I mean, did he even look at the 4 hour before sending me this? I'm not even sure he's taking the trades himself.
Yeah, Trader Joe, I am interested in a 428 short, so it's a few points higher than where you're talking about. But yeah, I can understand that this current level, we've got obviously the rejection of price at this 420, 421. So yeah, I can see why you're saying it's a short. I'd like to see price goes just literally 5 points higher.
Yeah, exactly. He left us, and now he's working in the background to just set me up. 30 lots. That's insane. Okay.
Yeah, from what I can see on our franc Swiss, which is a bit similar to dollar index and euro dollar, is that we on the war time frame we kind of managed to break a bit of structure. On dollar franc Swiss to the upside, on euro dollar to the downside, dollar index also to the upside. But overall, yes, we are still kind of in a bearish trend in there on the dollar. So question mark is if this is already the moment or not to reverse. But,
well, you know,
but it did manage to break. But the break goes into.
Yeah, I think there's a delay, or I'm just interrupting. I don't know.
Yeah, sorry. Yeah, go ahead.
No,
go ahead,
I mean, on the 1 hour, if I zoom out, I think could definitely get like a 1-to-1 risk to reward trade here, though, if we have the stop loss all the way down here. That could be interesting. I gotta see like what's my daily loss limit, because I closed a USD JPY trade earlier, so I gotta make sure that I'm not gonna hit my daily loss limit. I'm on the hyper growth, which means the daily loss is a soft stop. It's not a. Yeah, I got $250 away from my daily loss limit being hit, which is yeah, that's that stop loss. Yeah, I can't enter a new position unless I limit the loss on this one. Good level though. Okay, how much am I going to be making? So half a percent. So I'll go from. Yeah, I'll go to 2. Now that's not 0.5%. That's more. That's like 2%, isn't it? I'm on 20K account. 2,000 is 10%. So 1,000 is 5%, and 500 is 2.5%. So it would be a 2.5% win on this one, which is incredible. Like this is, I would like the amount that I'm risking on this trade, on this evaluation is so much higher than I would ever do on a funded account or my personal account. Well, personal account I can risk quite a lot, but not the funded accounts. Like on the funded accounts, it's like 0.24, 25%.
Yeah. I do have the same thought process when I'm trying to calculate the percentage. like you just did.
Yeah. Sometimes you kind of have to risk it on the evaluations, right? Because especially if you're trading, multiple evaluations and you're trying to get to that target. I think that's something we can do, but I don't think beginners want to do that. I think if you're kind of like, well, honestly, if you're a beginner, you probably shouldn't be, trading anything else in a boot camp, like a smaller boot camp.
Feels that trade should have been the one I'd front run as well. The story of the morning NASDAQ. I was looking for that 428.
Did you find something?
No, I was looking for the 428s, and we got to 425 or 426, and we just dropped 20 points. So I was really trying to be patient. This is the thing: when the volatility is so low, it's so hard to really be confident in an entry. Yeah, it's a bit annoying because I wanted to see that, and it's playing out. So there you go. That's how it goes sometimes. But yeah, I would have liked to have seen. I wanted to have the most clear, defined stop loss, and the moment I start trying to front run trades on the 4-hour chart is the moment it goes wrong, and I'm just not interested in doing that. Yeah, let me just put this. Let's pull up my chart. Yeah, so literally, I mean. Story of this morning. I was looking for so 427.4 would have been my entry. We got to 425. Literally, it's the area that who was talking about it? Trader Joe. Yeah, are you short, Trader Joe? Because I know you were talking about it. This whole level, even 421s was good. Looking at the lower time frame, but yeah, again, I'm really trying to wait for the 427.5s or whatever, and we didn't get it. So. This could now be the move lower, which I was talking about. So if you look at these charts, I've noticed that this chart is slightly different to MetaTrader, but yeah, the 358s could be in play. I wouldn't rule it out. So maybe there'll be another opportunity on the way down, but yeah, I was really looking for that, and we've bounced it already. Nice. Okay, it's interesting.
Yeah, he's saying that it can still go higher. I cannot. Price cannot go up. Yeah, I'm not sure. He's saying that it trades a lot based on volume, which is quite interesting. Yeah, I can see that price on NASDAQ is reacting from a supply level. Yeah, we'll see if this level holds or not. It's actually going to be quite interesting to see.
Yeah. So now the question for me, sorry to interrupt. Now the question for me is, if we get a retest of that 427, 428 level. Is it still a short? Because again, my target is 10, 15 points. We basically got that literally just on that trade. First test is the best test. Okay, we didn't quite get the test, but I'm just trying to weigh up now. Let's see how price responds. If we do make the move back into the 427s, it'll be interesting to see if I do end up taking the trade. But I would have really liked that trade to have just gone the extra couple of points. Because it's difficult for me to want to take the same trade after we've just missed the level. Yeah, let's see.
Yep.
Right. So looking at this USD stitch up right here, I think we could potentially see a breakout. There's not a lot of volatility today. I'm not really sure why. Do we have? I mean, it reminds me of.
I believe we have jolts later, so maybe.
That's right. Yeah, that is right. Because I was just gonna say, like, this reminds me of. Yeah, like I was just gonna say, like, this reminds me of. We have a major news event coming up, and obviously jolts is a major one.
Yeah.
Usually, I try to trade the gold. But gold is very difficult to get a read on.
Yeah, we've completely bounced that whole move there. Looking at the 5-minute chart, we ran down to this area here, which is interesting, to be honest, because you could have had a stop at 398. It's a fairly tight trade, but again, it's not defined enough with this volatility.
Pedro, did you put down the music?
Yes.
I gotta change that. That is this makes me fall asleep.
Let's change music. We have many options compared with what kind of I have. I have no idea.
Have you heard the feeding the ducks? Have you heard this one? This is no, let's not do that one. I got that one. Okay, sorry, Josh, I just interrupted you.
That's all right. DJ Jonatan and Pedro. I'll sit back and watch. Yeah, this price actions, I just don't like it. I mean, look at this 5-minute candle. I'm not enjoying that. Yeah, to be honest, 427s is looking. Yeah, I don't know. I've sort of been put off by that trade now that we just missed the entry, and after that candle, it's not appealing to me right now. It's a tough one. Price actions not been favorable for what I'm trying to trade.
Yeah, I can maybe do my analysis on an NASDAQ's going to be a little bit higher time frame, and then maybe I'll get into that 5 minutes time frame where you guys are. Just add my chart. Yep, there you go. Yeah, last week it was an interesting move to the downside, right? Initially it was quite bullish, and then was it Thursday that we had a big sell-off? Yeah, the Thursday that I actually missed the move. Just to give a bit more perspective on the NASDAQ, on the higher time frame, we are basically all the way back to the highs before the big fall that happened in March, April. Okay, so we basically already recovered maybe 90% of the move, which is interesting now to see if we're going to create some kind of double top scenario, kind of if these highs are going to hold price, or are you going to start with new all-time highs once again. So that's one fact, like, so looking at a higher time frame, we are getting back into this potentially supply level, or this top that was created in here, and we could navigate a little bit more into the lower time frame to analyze maybe the top, to see maybe what orders are still in there that maybe price could react from, but for now let's believe that this top that was created on Thursday, it's relevant. So we're going to be looking within last Thursday's high to see if we should be looking for shorts underneath that level, or maybe slightly higher. So after that, what did we have, right? So we had a nice move. Even before that, we had this initial move that was the Friday before that. Then during the week we went up, and then kind of Thursday went down again, and we kind of reacted from kind of this low, kind of still respected some kind of structure. When you're comparing with S&P, for example, I think S&P came back to retest the previous level of support resistance that was created before. The NASDAQ kind of stayed a little bit in here, and Dow even went deeper than that. Dow already kind of literally closed this gap that was created back in the beginning of May, if not mistaken. So then we had that push up, and now we kind of had this push down. The push down, it was interesting. So price basically comes back into retesting this previous level of support into this level, and in alignment with that, we also had this interesting demand zone, like fix, right, Josh? So maybe, I don't know if you're looking or not at that. I think did someone move my chart? I don't know. Is it me? Maybe it's loading. Yeah, so where this low reacted was actually quite interesting, because it was a fresh level. These lows never reacted from that demand zone, and that's basically where price came out the way really aggressively on Friday, reacted from it, and since then starting to move a little bit more to the upside in here. Now the same way that we had all these previous level of kind of support, kind of left shoulders, and this one reacted, we also have all these kind of levels of resistance in the past, even in here, and now price is kind of finding a little bit of bounce from there. Even this trend line, which I don't even know where this comes from, but even price kind of reacting from this trend line quite nicely. So initially start breaking a little bit more to the upside in here. And now the question mark is this the top in here, or price wants to at least go retest something a little bit more like that happening? Why is it loading again? Yeah, I think it's my internet.
And there's a lot of lines on here.
Guys, can you see my chart? I like this. Going smoothly, or?
Yeah.
It's all right for me.
Yeah. So again. Okay, got it. Sometimes I see kind of the page reloading. That's why. So that's basically where I'm at. Okay, from this top all the way to this bottom, just try to see until where price can go to find potentially new short opportunities. Even though this was not a bad low, okay, this is not something that we just broke structure expecting price to just completely move to downside. This actually, as we saw, kind of reacted from an interesting level. So right now, if we continue, we do have this supply level in here, which price may have not reacted. Yes, a little bit more room to the upside on the NASDAQ, and which can even take us a little bit more into the next one. Now, a bit more as you get into intraday levels. Which structures do we have in here? So we did manage to break. We had this big push up and down. This was yesterday. I don't know if there was someone who was speaking. I don't know exactly. Is price reacting from a support to resistance in here?
Your connection is terrible.
Yeah,
lagging quite a lot, Pedro.
Yeah, sorry.
Talk to your parents. You should get them a better connection. You should take some of those payouts, man. You should send them like
maybe far away from the
router. Gotta take care of our parents, you know. Can't just leave them hanging with a terrible connection like that.
Yeah,
yeah, he's caught.
Yeah, basically what I'm going to say is looking into.
Yeah.
Try my best.
Yeah, you did try your best.
Sell NASDAQ.
Sell NASDAQ. Okay, sell NASDAQ. You know what I'm gonna do? I'm gonna relieve the audience from the suffering of listening to that laggy voice. I like you, Pedro. You know, I like you. But it does sound a bit horrible. I'm gonna switch over to my screen here. We're on MetaTrader. I'm currently up $85 on USD. I'm hoping that I'm gonna get this breakout here to the upside. What I'd like to do is no, that's actually what I'm gonna do. I'm gonna max out the daily loss here. I think that's what I'm gonna do. Let's see if I move my stops to this area, and that would mean I'm gonna lose 134, which means I can have about 100 to risk, which would be 0.5%. Around that level. I'd stop loss here. Okay, let's go in with, actually, you know what? Let's do it 75 just to make sure I have a little bit of a buffer here. Yes, we got that one, and we have that stop loss here. That's the second entry. We're gonna put the TP up here. Right. Okay. So now we're looking at. Let's see. I gotta look at what is the risk to reward of this one. Let me copy the take profit here. Yeah, so the risk to reward would be 1.5. So we have 2 and 1.5, which means it would be 2 on the first one, so that's 2%. And then it would be 1.5, like 2.75. Okay, that's good. Let's see if we can adjust the stop loss here a little bit. Oh, I think, okay, let's take a look at this area. And MetaTrader is, okay. And even zoom in here. I'm gonna lower that TP just a little bit. Put it on the low of that wick, right? Okay. So I'm gonna switch over to gold. I do have another account, which I might be entering a trade on gold if I can find an opportunity, or if we see that USD/CHF breaks to the upside, I might be able to. But you know, the daily loss is based on, I believe it's based on equity and not balance, which means I need to be very careful here, making sure that if USD breaks out, I have to trail that stop loss with price so that I don't get stopped out on the daily loss while price is retracing. Okay, never mind. Let's look at gold here. We got gold on. We're gonna open up trading view. So let's see if Victor comes in to the trading room today, because I know that he was out yesterday, I believe. So maybe he is, you know.
I think I was on with him yesterday.
Oh yeah, but
yeah.
In the evening, in the night. Okay, so we have a level here on. We have a level here on gold, right? And no, so okay, I'm not looking at the screen here. So no, it's not a standard feature. It's a position size calculator. So you can go on Google and you can search for position size calculator MT5, and that's going to bring up that position size calculator. Right. Okay, so I'm going to switch to template here for the fibs. So what we see here on gold is a really good area below, based on 4 hour. We have the 50% fib and the 20 EMA here on the 4 hour, and we can also draw a level. It goes like this. So we see that it's a very good support. Now, when I see this, I'm thinking, okay, we're probably going to get a retest of this level, especially if it's an untested level on the lower time frames as well. So we look at the daily. It's an untested level on the daily, on the 4 hour, on the 1 hour, on the 15 minute as well, even on the 5 minute. Not really. It has an immediate retest right there, but so all the way down from the daily to the 50 minute, which is good enough. So I'm now looking at gold and thinking I want to go long here, and if I want to go long here, maybe I can short current prices. So if we go into the lower time frames to see if we can find any type of break lower, we have a few areas of interest. So we got this level here, and then below we have that level. Let's make a zone between these two. Remove the horizontals. So two ideas here would be long this level or move higher, or wait for this level to break and then short it down to this area is what I'm thinking on gold. It's a bit tricky though, because if we could just remove that price action, that would make the whole setup much easier. The fact that we have that price action right here kind of creates a support zone around this whole area, which creates a bit of a problem if I'm going to short it. But it's definitely something that I'm watching. All right, guys, we got Pedro, not Pedro. We got Victor in the background. You can just add yourself whenever you're ready to. All right, there we go. What's up, Pedro? No, Victor, not Pedro. Welcome.
Hi, this is Pedro. How are you doing, guys? This is Pedro. How is everyone? What's up? We have full house here. I see Josh, Pedro as well. So how is everyone watching us today? It's Tuesday, the 3rd of June. What are we doing on the markets? I see all kinds of I see an arrow. Is that a demand area? Jonatan, are you looking to go long? What are we looking at here?
I'm not sure. I think I'm more interested in going long on gold lower, like around.
Okay, it makes a lot of sense. Gold as well as EU is has a tendency to be on the bullish side. That's what we see on price action. In a short while, I will break it down and tell you all about it. But
Victor, I need your help with something.
Go ahead, let me know.
On the hyper growth account, is the daily loss based on equity or balance?
The the hyper growth on at the end of the day, it takes the
balance.
Yes, it's based on
okay,
the balance.
perfect.
Yeah.
So I don't have to worry about the fluctuations.
You don't have to worry about the fluctuation, correct?
Oh, nice. Okay, perfect. Well, that means I'm definitely safe on this trade right here. So we're long on USD CHF. Let's go to that one. That's that is the current USD CHF trade that we are in. Looking for that breakout to the upside. I like what I'm seeing here on the 5-minute, and I'm trying to get a read on. Actually, I'm gonna go back to TradingView, because MetaTrader is not the best platform for any type of analysis.
I see you have a
Why
new
is Victor
background,
not
Pedro.
telling anything? He just came on, like he's been here for 2 minutes. Relax.
I like that excitement. I like that expectation. You guys want content? We deliver content. Don't worry about that. Just stick around, hit the like button, subscribe to the channel, and I'll deliver. That's a promise.
Yeah. And also, guys, don't forget, we have trading challenge going on with the 5ers every week. Every single week we have a new trading challenge. It starts every Wednesday, so you can go into the hub. You can sign up to the next trading challenge if it's not filled up already. USD is breaking out nicely here. I kind of want to do the analysis on this screen, so let's switch over to this one. So yeah, and look at this. I even have a short setup here for USD and it's like, and then I go long in lower time frames. It's ridiculous, but it's looking very good now. Already up quite a lot. Looking good. Okay, so the analysis here on the lower time frames. What I want to see, there's no futures contracts for this, is it?
What is it?
CHF is, or is it? Let's take a look. Let's take a look. Futures. Oh, it is micro CHF USD futures. Okay. What is this? What is this? Okay.
Maybe not.
Yeah. Is this the futures? CHF CMC market futures? Is this? This is CHF USD, which means I have to invert the chart, and it seems like there's a very low volume in this market. You can look at the candles, right? The candles are. But what I wanted to look at is, so one good thing in trading, you have the indicator template, right? And so depending on what type of analysis you want to be doing. So here, for example, I have the RSI and MACD divergence. So if I add that one, you'll see the indicators where we can look at that type of divergence. And then we have another indicator template with volume analysis, which adds the volume bars, but I can't calculate them because they don't provide volume data. Okay, so I assume that we can't get I assume it's not a widely traded futures, but the reason why I'm gonna look at futures is, as we know, the volume in the forex market means nothing, basically. It's just tick volume. But we can look at the volume here anyway. Maybe it's gonna show us something. And then of course we got the OBV at the bottom, which we have to take, like, sometimes the tick volume makes sense. When I'm looking at price action, right? So I'm looking at a breakout like this. Now, if we use the replay tool on TradingView, I mean, what we're seeing here is a move that very much looks like a fake out. So we have a fake out, we have a fake out here, and then kind of like a hit of resistance, and then we have a fake out here. And every time we had a fake out, price goes from resistance straight down, from resistance and then straight down. And every time we hit this area, price seems to come lower with rather good volatility. Now, if you look at what price is doing right now, it's showing us something very different. We have the initial rejection and possible fake out, but then it finds a low. and it finds a low at an area which could be viewed as a break and retest of the breakout area. So now we don't really have a fake out. We have a break and retest with that retest actually holding. And what I would love to see on the volume here is that volume is picking up, which we're not really seeing here, which is a bit concerning. We did have volume somewhat picking up on the breakout, but volume is not confirming price. We actually have a downtrend on volume with a move up in price. So that's the divergence between volume and price. And of course, this is tick volume. It's not really that important, but still interesting to look at. Then we have a horizontal level here on the OBV. And what I'd love to see is a uptrend in volume with a breakout in OBV to really confirm this move. And if that happens, if I had more available margin, I would probably add to this position if we saw that. All right.
Coming back to your question, Jonatan, it is the daily pause as well as the max daily loss on the high stake account, which are different things. One pauses and the other one you actually invalidate the account for everyone watching. It is the balance or the equity, whichever is highest, that will be taken into account at the end of the day, that off of which the calculation is done. So equity or balance. So it does mean that if you have a lot of floating profit at the end of the day, that's a risk for the next day. So if you're a swing trader, you have to take that into account.
Yeah, definitely. Oh, Mike's got a haircut. We're gonna have a Mike coming on later. You got a haircut, man. Wow, that looks amazing. Nice. Now make sure that when Mike comes on the live stream, make sure you all comment his hair like along the lines of like, what have you done? I can't believe you did that. Like this is not you. This is something like that. We really have to, please.
It's Mike 2.0.
Yeah, exactly.
Jonatan, there is on pound. Does pound look attractive to you? Pound dollar, that is. I've been watching.
Yeah, it looks very good.
Are you already waiting for a level? Or what are you waiting for? Are you considering an entry?
So we can look at it. Let me. So I took a breakout trade here on end of last month on GBP USD, and then I failed to get in on the retest right here. But I mean, we'll look at the day, the weekly, and remove some things here. But I mean, we do have a confirmed break and retest on the weekly. We do have a weekly open and close above the levels. So it's a confirmed breakout on the weekly. Maybe I thought about another pair. This is not really looking the same as. You know what? I'm not really sure about this because, like, the contrarian in me, the mean reversing trader in me, would say that this is a short. But then the trend following trader, if I look at the lower time frames, I would say like, okay, on the daily, this is a picture perfect break and retest. On the daily, and I would probably think that we can look at the tick volume here, but if we look at the futures volume coming in, probably going to get some good volume data here as well. Not really on the tick volume. Really matter though. Let's so that's a good break and retest on the daily. We have a good bullish candle on the daily right here. We're retesting but looks to be a low time frame breakout area. So if we go into the 15 minutes, we're probably going to get a, I think this is a good area for potential long. This whole area right here. Now, Victor, you're probably going to tell me this is a short, but you're going to tell me you're going to tell me that we have a retest of an order block.
No, we don't. Actually, this is all about you. I saw it, and it's not a setup to me. It is breaking down though on it. There is a, I'll show my just one little thing, but it's more about your strategy or your setup than mine. I will remove yours just a little bit. This is GU, of course, on the daily time frame, just to get some perspective. We did create a bearish order block on the daily, and we are likely, in my opinion, in terms of order block, likely to be heading for the order block below us, right? So that would be a short or a reason to look for a short. However, if we go looking closer by, I just saw this price action, that break and retest, and I thought, hey, this might be something Jonatan might be looking, or maybe is already in for a long. I would be going long, of course, but from the daily order block, so a much lower, a much deeper retrace. But if I had to do anything, it's not a setup to me. But if I were to, according to my way of looking, I wouldn't be looking for a long. But that's just fine, as we know. One thing I can say is there was an H4 order block right there, as you guys can see, and I left it exactly for that reason, because it has been invalidated in the last previous candle, meaning it's breaking structure, and that opens the door for lower prices. I don't know, of course, how low it will be. Will go. I would just wait for price to reach the structure of the opposing structure on the daily time frame, because it's leaving a daily time frame, a daily bearish structure behind. Right? It's coming from the daily, and I would assume then with likelihood that it's going to go to the daily structure below us. But it's not a setup. It's not something that I would necessarily trade. What I would be looking to do is, if I were to take any trades on GU, I would be looking for a short from this area.
I told you you're looking at a short. That's what I said.
We got there. Well,
not from the current position, but yes, if there's anything, I'm inclined to be looking for a short in this, especially because it just broke that H4 order block. I understand. Also, there is a outside bar here, which is not the freshest structure created. This is the freshest one, but the outside bar is, let's see, it's still fresh. So I would actually, we can break down and maybe even have an area we can look for entries. Maybe during this stream, take a trade or two. Let's go. Let's see what else. So
you're waiting for price to get up to the highest before you enter a trade.
Yes. But
that might come with either the jolts or no. We already have the Eurozone. So yeah, maybe with the jolts.
No. Yeah, that's in about 3 hours and.
Yeah, I mean we already had the Eurozone the inflation data.
Correct.
I thought that was coming out later, but we already had that.
Yeah. I would be looking for a reversal or a possible. Although the market structure, the breakout is very clear to me as well, right? It look at that big candle, right? That's indicative of where price wants to go. That's where the push was. So it's likely that we could have a follow-up push-up or a continuation, but I just trade the order blocks. If the order blocks are here and it is within the daily order block, and we had an outside H4 with a following another bearish order block, then I want to be there to take that possible short. Even if this, the fact that I would be taking a short doesn't mean that this candle is completely wrong. That candle basically is the breakout or the move away from that created that order block of the daily. So that move becomes negated when we actually close below this area, which is not something that I necessarily need to happen for my my setup to work. I'm just looking to go for that daily structure below us, but I need price to reach this before reaching it. If price, this is the general idea, right? It could come back before reaching that daily order block on the lower below us. If it reaches before, I'm no longer interested in. If this happens before reaching the area that I indicated, I would assume that we have switched back we're back into demand, and we're going to be pushing higher with the impulsive move that we saw here, right? So it's a thing of sequence, which is important to understand in the story, or the, you know, what price is trying to tell us, right? It broke out, comes back into some kind of demand, and until it reach that area, you can go short with it. But once it reaches it, you know, that short is probably no longer the best entry or best direction to be taking, best trade. So that's my idea, but I don't have a trade here. You know, you could, for those who are looking for perhaps a shorter move, you could have been looking for that H2. There is some alignment between that daily lower border of that daily order block with that H2. You see how that is just beautiful. If I were to be scalping, this would be a place where I would be getting in, right? We have a higher time frame, the daily order block, that we are moving away. We have two bearish structures on the H4, meaning price is getting ready to push back, and it creates a bearish on the H2, and it comes back to retest it with that wick. We can actually go to the 1 minute, and you can see how beautiful this is.
Victor, sorry to interrupt you, but I gotta go get some lunch. I'll jump in a little bit later. I'll have my CHF trade open here, and I'll see you guys. I'll see you guys a bit later. Okay.
Thank you, Jonatan. Enjoy your lunch.
Right, take care.
See you later. All right. So as I was saying, I could, if I were to, I didn't trade this. I didn't take a scalp here, but this is the type of trades that I would take, right? So I have a higher time frame structure, a daily. I have a H4, not one, two structures that I have been creating. I have a reason to believe that price might wanting to go lower, because that's the retest of that order block on the daily below us. We have all of these things telling us that a retest of any of those higher structures is possible. And what do we see if we go to look at that H4? Is it visible? It's not that visible on the H4. It was visible on the H2, which is that structure being created right on that edge, that lower edge, right before it falls off of that cliff. But one little time, let's look at the H1. If it does it obviously it also there, but there isn't. Actually, there is. It's also visible on the H1. It comes back right there, right? That little wick. That's what I would be getting in, right? Looking at the price action, and you can take this, different ways. You can wait for the market to switch back. You can wait for a break of the trend line. I don't use trend line, by the way, but you could be looking for your indicators. If you have deceleration, you have the divergence in terms of when it's topping out but not getting higher on your indicators, and you see that double top on the 1 minute, and you take the short. Quite easy. That indecision candle right there. And even if you didn't, you could have taken in something when it breaks down. So it's kind of those are the type of trades that I would take. In that case, which I didn't, I would target something of a little, not just one time frame higher, but a little bit higher, maybe on the 5, maybe an order block on the 5, and that would be something like a scalp TP, right? Just going for that structure, because in the end, you don't know if it's going to pierce deeper into that structure, meaning, you don't know if it's going to do this on its way down. You just want to have that initial, it taps back into it, and it moves a couple of pips. It could be, 10 pips. It could be even less, actually. All right, that's the idea. So let's, Pedro, what are you looking at this beautiful noon? Actually, by the way, you have a nice background. You have a new location there, right?
I am in Portugal. I hope I'm going to talk really slowly so the internet can catch me. Okay.
Oh, I see.
Just not even to create any bugs. I actually start writing on the chat, so kind of just to share my thoughts with you. Okay, just it's maybe easier today. But yes, and what I mentioned is that potential sell a little bit at those highs, today's highs, that I may be looking at for a potential opportunity. And to be honest, actually, this short that we just talked about in 1 minute time frame, if you want to be a bit specific, there was maybe even a Quasimodo, maybe on 5 minutes time frame, in alignment with that level. If you zoom out a little bit, maybe somewhere in there, at least on my view. Like the beginning of that rectangle that you had, that's basically that could be a left shoulder. But yes, on the pound, I like the idea that pound actually retested to the previous highs from last week or something like that, and now is finding new selling pressure. Exactly, it's finding new selling pressure, and that's something that I'm going to be looking at. Another thing that I mentioned several times from last week, and this is more related to the dollar index and the euro dollar. If you guys remember, I was looking for the euro dollar to take these mid-range highs and to get a little bit closer to the top from, I don't know, like 3 or 4 weeks ago, and the dollar index as well to get a little bit lower to potentially find new buying pressure. So we are now approaching those levels. Euro dollar now is getting too close to that. So in case actually dollar index has the idea to now completely turn bullish, or around this level to turn bullish, and the euro dollar to turn bearish, that can also help maybe for the new sequence of selling opportunity on the pound. Which is going to be something to pay attention. Maybe this is going to be some kind of a double top on the pound, comparing with the last week highs. And yeah, I'm sure. Thank you. I hope I don't talk that much, but basically what I wanted to say is basically the pound could maybe create some kind of double top between this top and whatever structure is creating right now. You may have a new fake out. I like this level that Victor also mentioned, but just if I transition then into just the dollar index and the euro index in the euro dollar, that actually reinforce a little bit more of what I've been talking about for a potential short. Okay, we are even talking about potential shorts on the pound, and this is just a correlation that can happen. Is that even when last week when you created this low on the dollar index, I mentioned that maybe dollar index could go a little bit deeper before a potential bigger move to the upside. So now we are kind of approaching even more that level. So let's see if you're going to find more buying pressure or not from here. And euro dollar, which was the other one that I've been waiting for as well for quite a long time. Just wait until it loads. It is, yeah, so it was above this structure. So last week we created this top, we moved down, it broke a little bit of structure in here. And now I've been waiting for price actually to get a little bit closer to here for a potential bigger short. So we are now a little bit more in alignment with the euro, the pound, and maybe the dollar index. That can lead into maybe strength on the dollar and bearishness on the euro dollar, pound dollar, and so on. So I think it's going to be an interesting week. We are going to have many news, or plenty of news announcements this week. So yeah, that's going to be an interesting one. Someone is there saying that euro is maybe ready for a big fall. Go ahead, Victor. Sorry.
Yeah, maybe we can look at the euro as well. While you were explaining your ideas on the pound, I've been looking on the higher time frames to get a reading at what we're talking about. And I'll go through that just a little bit. On the very high time frame, remember we just closed a monthly time frame, a monthly candle. So it is at the end, right before the end, or right at the beginning. It's nice to look back and see, did we close? Did we break any structures? Are we doing anything? Are we ranging? Where are we on the higher time frames? And the first thing, right, top-down analysis. First thing we see is right the GU closed last month above that order block we had. That order block was created, was retested on the 6th candle after its creation. That's fresh in to most people. And even though it was a fresh candle, a fresh order block, and even though it's the first retest, price had no issue closing above it, invalidating it, meaning that on the higher time frame we should expect price. That opens the door for higher prices. Maybe not immediately, but that opens the door for maybe down the road, a couple of months from now, to expect price to continue to move higher. We've had already a quite nice move, so it might have need to take a breather, perhaps even use this broken structure as flipped support. In this case, it would be a supply turns into a demand. That could happen. That could definitely happen. But the only thing is, it's the invalidation, right? That's the cues of the market, right? The market tells us about what it wants to do by the way, the degree, and the frequency it creates and invalidates these structures, right? So this one is it invalidated, meaning it's opening up the balance in terms of who's in control is tilting to that's another weight on the side for the buyers. For the weekly order block or the weekly weekly time frame, we don't have anything specific. There is a order block below us that could be used from what I said, right? That retracement, that breather, that GU could be taking in a couple of weeks or so. It could be that weekly order block we have below. That should be, the area where price could reverse from. If we do have those that retracement that I alluded to. Other than that, there isn't anything, right? That big handle breaking that bearish structure we had is telling us the same story. The story that, on longer term, things are looking quite strong, quite bullish for. And Jonatan is back with us. On the daily time frame.
All right. Let me. I gotta show you something. Look at USD CHF. Look at this. Look at this breakout right here. Now that is a breakout, and it's just about to hit that TP. Hopefully, imagine if it's going to reverse here. Now, what I can do here is, what I'm going to do here is to really get the most out of this trade, right? I am going to move my stops up to here, and no, I'm not going to enter a new position. Okay.
Awesome.
So if we hit TP here, which I think we're gonna hit TP, I'll be halfway to getting funded here today. Got 5% more to get funded. Let's hope. Oh man, it's retracing. That was so close. But the volatility is definitely there. We can look at the one hour, but it's like, shit! It hit that wick. It hit that wick right there.
Patient.
Yeah, you know me. I'm not really patient.
Jonathan, act like you were your bot that is super profitable.
You said something about bot and profitable. Yes. All I can say is I agree. Okay, we're getting a retrace down here to this level. So what I can do here is we can put in a pending order right here. Okay, so entry can put in the pending order right here with the stop loss being the same. TP up here. Yeah, okay, let's do it. It's too close. Okay, I can't. So I can't enter. Okay, so why might use to enter the market here. That's a good retest. Okay.
There's on the 5ers, the stop level is 1 pip, the 10 pipette. So you can't enter a limit order, a pending order that is too close.
10.
To the,
okay, 10 pips, right? Is it pipettes?
No, 1 pip. 10 pipettes, 1 pip.
1 pip. Yeah. 1 pip. Okay, so I got four positions open on this one. I am max the margin out to fully here. So I have to obviously manage this trade carefully. It's coming down. What if? Oh, look at the 5-minute. That is a terrible wick right there. That is not like that. That is a.
What are you targeting? Is it 99.5?
Yes, not 19. What do you mean 99? You say 99? I'm on USD CHF. 99. That would be like in another universe.
Okay, no problem.
I'm targeting 81, like 81.90, something like that.
Because I'll
James, you're coming in. You're saying like, I'm the best, basically, and I was like, thank you, man.
The humbling market.
Yeah, thank you for that. Exactly. One moment you're thinking you're the best trader, and then it's like, oh, wait a minute, I'm just gonna retrace here, take out your stops, and then move to the TP. Yep. You might have to wait for that. I mean, wait for that TP data. I think we're I think we're at a good level. Like I'd love to just extend my TP. Like just extend that TP. Like we're at such a good level. And I would love to just extend the TP and just be very greedy and just let it run. But that is most of the time not a good idea, you know, when you start planning, you start looking ahead, you know, like, oh, you know, we can have much higher TP here. But what I like about this one, it can, you know, if you look at I think that's a good TP. But I do have my eyes on like this level. And if I just move my TP up into that level, that would potentially mean, and this is where the greed comes in, right? Because I'm going to get funded on this account if we hit that level. Okay, so I'll have, what is it? Yeah, so I'll be funded with, how big is it? Like 40K. So I'll have 40K to add to my funding if the year hits this level. Worth the risk? Yeah. Of course it is. What else?
All in, Jonatan. All in.
Yeah, that's kind of what I want to do, but would it be responsible of me to do that? I mean, I don't know. We gotta risk it, right?
I think you have to just go through your
personal account. If this would be on my personal account, I would absolutely increase that TP, but I would also widen my stop, because obviously on my personal account, there's no rules. I can lose as much as I want, and there's no daily loss limit. There's nothing like that, right? So on my personal account, I would just increase the TP, but also increase the stop loss so that it has a lot of room for error, and then, you know, close the trade or manage the trade based on price action, and not having to care about the daily loss limit, which should be calculated, of course, before entering the trade.
Well, Jonathan, I wouldn't be worried because Harash says it will go up. So you just have to trust that he knows what he's doing, and it will go up, and you don't have to worry.
Yeah, exactly. Thank you, Harash. Another good comment. We see the psychology of a trader directly, and this is why we like about this group. Yeah, so I'm a very emotional person, and that's why I'm also better at swing trading, because you know, trading intraday and scalping, like that's just not me. That's just not my personality. That's not my thing. Like, I've made money doing it, and I keep on making money doing it. I mean, I would like to say I can trade any type of trading, any type of trading style. You throw me, you know, whatever pair you want me to trade, I can trade it. But like, there's a certain level of stress, right? There's a certain level of stress involved in trading that high volatility on the lower time frames. And long term, I do find myself being much more in harmony with the markets on the higher time frames, you know. So Rain BFX says, are you following your strategy? Depends on what the strategy is, right? So right now, this is a breakout strategy. Now, from testing, we know that, or I know that this type of trading has a very low win rate. But you guys saw me, I've been stopped out on this trade 2 times already. So for me, when it comes to breakout trading, I see a breakout, low win rate, I get in on the breakout, get stopped out, the breakout continues, get in, might get stopped out once again. So I usually have a rule of 3 or 4 stop outs on the breakout before I I've been risking too much. But then if the breakout is confirmed, you can see I add to this position. So if you go into the 1 hour, you can see here that, I mean, the 1 minute, you can see I entered one long position here, another long position here, got stopped out here. Then I bought another long position here, another one, and another one. So when I see that the breakout is confirmed, then we have confirmation on higher time frames, higher than 1 minute, then I can start adding to the idea that I think is confirmed. And in this case here, if we go to the 1 hour, we have the 1 hour candle closing in 20 minutes. If this 1 hour candle can close above this, then this is a confirmed breakout on the 1 hour. We already have a confirmed breakout on the 15 minute, and of course the 5 minute looks great. Now we do have a lot of wicks up here, so we have a obviously on the 5 minute we got that wick on the candle telling us that there's a lot of selling pressure in here, but the momentum is still here. So the fact that we had a big wick here on the 5 minute tells us that there's a lot of selling pressure here. But if this is truly a fake out, then we should not have bounced here where the move originated from. Same on the 50 minute, big wick, but we had a lot of selling pressure right here, and now we're up. We managed to get above that level. So even though we had a lot of selling pressure, the bulls are stronger in this case, and that's the type of bullish momentum that I want to see. Okay, let's see what we get. I think you can aim for higher T. I think so too.
I want to give you a couple of things that I see on the charts.
I don't want advice. But you
they're
can.
Not advice. They're just breakdown for the general public to consume.
Oh yeah. Yeah. It's a very broad advice for everyone else but me.
Everyone else but you. Yes, that's exactly right. Let me switch back to what I see. Right, these are the things that I see. They're not a. These are for education.
Yeah, okay, so I'm burning only. The lunch in the oven. I gotta go. I'll see you in a bit.
All right. Let me switch back. I'm gonna put my chart on. This is dollar Swiss, of course. Let's see. This is not an opinion on whether or not the trade is likely to hit DP or not, or stop loss. This is just the elements of price action that are visible to us. All right, and those are the things that I trade on. So this is my view on this pair. Let's do it. I was still doing. You want solutions? So you don't want advice? Agreement, no problem. Let's look at the chart on the monthly time frame. We are. You can clearly see that we broke that level and previous swing low as well. So on the higher time frame, things are looking quite bearish for this pair. To look closer, we can see that we had on the weekly time frame, right? We had a break and retest of that monthly. See how beautiful that is? So technical. You have a bullish or a bullish structure. It goes through it, comes back, and it flips. It flips from demand era into a supply, and it pushes price lower. Now the thing is, we created quite a nice structure below us, which is that weekly outside bar right here that created that order block. We had already a one touch. It's all very specific. First attempt or first retest, and this is the second one. Still, I would say that this is a great area where we could expect price eventually pushing higher on the weekly. However, who is in control in this time frame? It's obviously the sellers, right? You see we have the flipped structure on the monthly. We have a bearish order block that was retested very nicely with that wick and came back beautiful and created and we're currently showing, it hasn't created, it's currently showing another bullish order block to be created. So I expect price possibly having some pop from this structure, but the question is it already happening? If it is, then Jonatan, of course, would be in a very good trade. On the daily time frame, let's look at the structures. What do we see? From this point, right? It's not a surprise. From this point, from this structure, it looks like we are heading, and we already did that, which is moving away from that monthly into that weekly, and we already reached target, right? So that's why I think we could be looking for a possible reversal back to bullish, maybe to some structures on its path that it left behind. Maybe this structure, I don't think it's going to necessarily get to this area because of higher time frame market structure, but it can at least come back to maybe half of that move, maybe some portion of that retracement that we're seeing. Not retracement, this is the actual continuation of the impulsive move we had on the higher time frame. So that's what I see. There's a possibility of price, maybe it's already happening, or maybe it's still to come. And why do I say already happening? Because of course you have that order block. Look at that. I don't make that up. This is not an analysis I did before. I didn't select this. This is just because of Jonatan was looking at this pair. Price comes back into that order block. It's not fresh. It's not part of a quasi. So it's not a setup that I will be taking. But nonetheless, the market is reacting. This area, this fact that it's bouncing off a daily order block tells me that Jonatan's trade has a good chance of having at least a push if we're moving from a daily, right? This is the daily time frame. For those in the chat, paying attention. Let's see how our viewer, how much they're paying attention. If we're leaving, if price created a daily structure, okay? We created a daily structure and came back to retest it. What is the likely or logical area that price wants to go next? Once it retests and starts moving away from that structure, I'll wait a couple of seconds to let you guys tell me what you guys think.
Yeah, on that note, I'm going to shoot. I've been here for a little while. I'm not seeing a huge amount on NASDAQ. Volatility's been pretty slow. I think we're waiting for jolts, so I'm going to sit and wait for that. Maybe I'll join at market open. Who knows? But yeah, I'm going to shoot. Have a good trading session, everyone. Be patient for the right setups. Execute at a high level. And I think I'm back tomorrow. I think Sal's here, who's also a scalper, so we'll probably see some scalping live trades and a little bit of competition. I'm sure I get pretty competitive. So yeah, I look forward to it. I've enjoyed today. So yeah, if anyone's got any questions for me, there's a link in the description that you can get in touch and learn a bit more. But that's it from me, and yeah, enjoy Pedro and Victor's company for the rest of the session.
Thank you, Josh. Thank you for your collaboration, for your cooperation in our stream today. Have a great day, and hope to see you soon.
See you soon.
Yeah, thank you.
All right, so we have a couple of responses in the chat. Let's see. We have, let's say Henry says up. Henry says to the next OB. That's correct, but which one? Which OB exactly? Are you talking about this OB, that one on the weekly, the flip monthly? Are we talking about perhaps an OB that I didn't mark, or perhaps this structure? It's leaving the daily. Where is it going to? Henry Skrillium says up. Let's see, upper side OB. Okay, so upper side OB, that's a good way of thinking there, right there. That's actually a very valid structure to think, very conservative, but very good one. I like that, Haresh. To the right, okay, good chat. Let's see. We have a few more. The answer is, or the answer that I was looking, it's not like a one absolute truth. It's not like that. But when we create, you can see this going back on historical data. You can just test it out. You don't have to believe me. When you have a structure that is on one time frame, typically, and it's leaving, we don't know yet if it's leaving. This is just a little pop. It hasn't even closed yet. It's on a daily time frame, so we'll have to wait for price to close today and to actually have an idea. But if we have a bounce of this daily structure, the likely area, the logical next area that you should be looking for price to go to is the opposing structure in the same time frame, unless there is another reason on a higher time frame, let's say a weekly, a monthly, in its way stopping it, right? In this case, there isn't. The weekly is all the way here, the monthly is above us, and in between we have one structure, which is the daily. And to me, this is the first area that I'm going to be looking for price to go to, because it bounced off the weekly and we're going, it's, price action is very logical. It goes from one structure to the next in the same time frame. Not all of the time, but a lot of the time. Quite often it does this, right? It does that ping pong movement between the same time frame, not at the same, not all the time, not, how do I say this? Not all the time frames are, at the same time, but you will see that process going on, right? It goes to the daily, it comes back and creates perhaps another structure above or, below, and it goes back to maybe to the second structure, because we do have more than one, right? That's the outside bar on the daily. We didn't even tap into that. This structure is part of the momentum we had as we went from that flipped structure on the monthly to that weekly demand zone that we're currently bouncing off, right? So I think this could be a great target as well. But for my first trouble area, I would expect this order block to be the target for price. All right, so that's a good thing. If this is not about Jonatan's setup, but this does, tell us that there's that possibility. It is within the realm of reasonable possibility for price to go eventually there. Not necessarily today. It could be tomorrow. It could be today. But we'll measure that with ATR. Let's look at the lower time frame. See what we have. So we have the daily. Look at that. Very clear how the market gets there. Two very big wicks. A third one, and then off it goes. Now, the only thing I have, and this was the reason that I was asking Jonatan about the 99, if he was targeting 99, I meant 0.81995, right? Because there isn't anything in this big candle, bearish candle, other than this obvious wick, which would be, something. Actually, just trades this, right? This is the on a higher time frame, of course, but this is a wick retest, right? It breaks it and it comes back to retest that wick, and we typically see price react to them. It's not necessarily change direction completely, but it does have a reaction to perhaps before it perhaps continues to actually reverse from higher levels. And I thought maybe that was the reason that he was targeting, but I think he's targeting something else, something from the left, from perhaps other areas and zones that he marked on his chart. Now we have the daily order block, which we bounce off, and we have two order blocks that was created as it was moving out, which is both of them on the H4. That's another reason, right? We have multiple time frame telling us that there is a move, there is at least substance for this pop, that this is an outside bar. This one, these two, they create outside bar, and this is on the H4. And if we apply the same reason or the same reasoning, that we are leaving H4, what are the logical, applying the same rule that I just gave you guys, same rule of thumb, if we're leaving an H4, what is the likely structure that we're targeting next? Let's see if you guys can tell me in the chat. Right, the same rule I just talked about, right? It's bouncing off a daily, it's going to the opposing structure on the daily time frame. Now let's apply that on the H4. It's telling us it's creating this H4. Where is it going to? The opposing structure on the H4. Where's that? That's this structure. So unless that's just one idea, one indication. It doesn't have to be, a setup and you put your TP necessarily there. You have to consider, multiple things. The ATR, you have to look at perhaps structures that it created in this candle. You can't see them on the H4, but maybe on the H1, you could see perhaps some order blocks here. News could be coming in about 3 hours and 6 minutes. That could change everything. So there are multiple things you need to consider, but that's just looking at the structures that it creates. Could be a reason for you to be, to have this as a target. Another thing that I would like to check is the ATR. What's the ATR doing today? It's 69. And let's measure what the market has done so far. Right? So currently we are at 41. So do we have still room to move higher? Let's ask the chat. Do we have still room to go higher, or have we already done the move of the day? Anyone? This is yes, we have. Harish, thank you for that. Yes, we do have some. We don't. The ATR doesn't tell you which side it's going to expand, either from the above or below, but it does tell you that there's, on average, and we have news coming out, so we have reason to believe that there's more volatility, more momentum in the market, more room for market to expand. We still have about 18 pips to go. So let's mark that. Where would that be? 60, 69 was it already? So we're already 69 is actually in that daily order block that was created. So it is not only based on the order blocks that we're seeing that we could reach the other order block. It is also within reach for this daily range, right? I like that because that makes it probable, right? Reasonable, realistic to be reached. If you're thinking something is going to be reached, a structure, a level, whatever, but it's, price has to do like extraordinary things to reach there, that's not likely. It may happen, but it's not going to happen often. So I like the fact that it's 82.20. Let's put it a little bit lower. That would be based on the ATR, the target that we have, or the if, and this is if the news is positive for this pair, meaning that positive for dollar, because dollar is the dollar Swiss pair, of course. Let's go to lower time frame. What else do we see? H2. There isn't anything in there. Nothing to stop price. So I would the only issue I have is that we have this current rhythm where we have the impulsive move, some kind of retracement, impulsive move, and we could have some kind of retracement before we have that next leg up, right? That's the only issue that I have with a position that's in here right now, because we're right after. You still have to go through that possible consolidation, maybe even a retracing before we continue, unless we have a break, a continuation, not a breakout. The breakout already happened, but a strong continuation to the to higher targets. I wouldn't be targeting that ATR. I would just target this one, or maybe even these lows that we have here, just to make it more likely to be hit, right? You don't want to expect price to do the whole thing. This is 09, and I think Jonatan was aiming at 07. So this makes a lot of sense to me. Jonatan's TP. So we'll see. We'll see when he comes back to see what his trade has turned for him. Let's check the chat. Pedro, how is the sun in beautiful Portugal?
It's a bit windy, to be honest, but I think it's going to get better in the next couple of days. And I was looking at that dollar franc Swiss as well. It was more of a reaction on the dollar index, a small reaction, and now it looks like the dollar index is moving higher again. And just looking at your chart on the euro dollar as well, looks like that euro dollar also is continue to move a little bit more to the downside. So yeah, I think Jonatan is safe in terms of his target. I think price is going to reach to his target on the dollar franc Swiss. So he's going to, in a bit, he's going to jump into the stream again and be super happy to show his take profit.
I'm sure. Actually, we can time Jonatan's re-entry. Just look at dollar Swiss. Whenever it's reaching that TP, Jonatan is going to come in, minutes after, if not seconds.
Exactly.
Actually, do we have his screen to show the trade?
No, unfortunately,
we don't have it.
Don't. Yeah, I don't.
Okay. Because I don't know his TP by heart. I could go back on YouTube to see what it was. He had it on screen, of course. But a very beautiful trade, by the way. That's how you do it, right? You gotta have a. There you go. Oh no, this is. I thought it was Jonatan. How are you doing? We have in the background a very very popular among our viewer, a trader who obviously a trader, but a very good trader, someone who takes precision entries, holds the trade like a boss, and is he's smiling in the background, but it's all true, guys. It's all true. It's not fluff. This is an authentic trader. I like watching. It's Griff, of course. Tell us anytime, whenever you're ready to join Griff. You are okay. I was all right. Let's have Griff with us.
Hello,
Griff,
Victor.
my man.
You're too kind.
How are you? Griff, my man, how are you doing?
Yeah, I'm fine, thank you. I'm great. How are you both?
We're great.
Yeah, good.
Pedro is enjoying the Mediterranean sun. I'm here in an undisclosed location enjoying the light. And you, what are you up to? What is the market? Are you looking into any trades currently?
Well, I'll be honest. I'll tell you what. This last week,
Okay.
I've not been looking at the markets so much, and it's not because the markets haven't been active. It's because my daughter was born, so I've just had absolutely. I've been washed
Wow.
away. I've had no time. I've had no sleep, so I've not been watching the charts too carefully. But I'm on it now. I've given myself a week, and yeah, I'm looking at the markets, and I've not missed much, so I'm quite lucky.
Truly amazing. Congratulations. We have
Congratulations,
a brand
Griff.
new dad.
Thanks, guys.
Brand new dad in the room.
You hit your
awesome,
biggest
man.
take profit.
yeah, you can say that.
Awesome, man. We're very happy for you, Griff.
Congrats.
Those
man.
are the important things in life, right? We tend to focus on career, in success, trading, this, that, strategy, but it's family. Family is the those important things when we go that we will remember, not what we own, but people we had and we loved in our lives. So that's amazing, man. I truly I'm very happy for you. We have Mike in the background with a new haircut, a very, I will say, very stylish haircut. I'm not gonna say anything. I'm gonna keep it a surprise because this is just Mike. I love this. Mike is always surprising us. All right, so I'm going to Mike. Would you like to? Are you ready for the transition? Not really. You are. All right. I'm going to anytime now. Let me check your. Let's get your things in place. Actually, there are a couple of intros. I'm not sure. Is it the third one? It is.
I'm
Okay.
excited
All right.
to see his
Perfect.
haircut.
Thank you, Mike. Well, I'm going to be coming back for everyone who is. I didn't finish on the GU trade. Obviously, the sequence or the unpredictability of our stream, right? It's a free form. So I didn't finish on GU. We'll get back to that for sure. EU as well. I think there's a lot of structures that are possible forming before the news comes in, but we'll talk about that in about 57 minutes. Griff, it's always a pleasure, and I always wish to stay with you, Griff, because I would like to interact with you more often. But I'm sure we will manage that in the future. That's going to be for me not for today. For now, I'll come back. Pedro, you're staying?
I'm going as well. Hopefully, I'll try to fix my situation here with my internet, whatever it may be, because we'll have the Portuguese live stream as well later on at 5 p.m. Griff, congrats, and we definitely want to hear how your journey of how is it going to be a trader and a dad in this first. A dad of a future trader for sure. So definitely, it's going to be better than all of us. That's what we expect for everyone that is starting and that has a teacher like you. So that's perfect. Thank you guys. Enjoy with Mike and Griff, and I'll see you guys later on. Thank you.
All right. So stay tuned, and Mike will be with you, Griff as well. Brand new dad in a short while.
That's right. I am back with a new haircut. Now, I heard
Wow.
what Jonatan said. I heard that there were going to be comments about my hair because I'm always keeping an eye on things. You think Jonatan doesn't know what's going on? Yeah, I know what's going on. I keep an eye on all these things. So there's no way that there is going to just be Mike just shows up with a new haircut and, you know. So Henry, shout out to Henry, spoke earlier about my tinfoil hat. Well, I didn't come with any sandwiches in my tinfoil hat today, so you have to deal with my paper bag instead. It's usually used for my hyperventilating when I'm taking a trade that isn't going my way. So instead, I'm going to use it to protect my hair. So I hope you will understand and appreciate things. But yeah. I can see that I'm making Jonatan laugh in the background, so you know maybe we're going to get him out on out of his comfort zone and comment on the hairstyle. But if you're all ready for it, I will. I don't want to blind you guys with the horror, so just everyone's ready, all right? So just there you go.
Wow, lovely.
There you go. Lovely Ukrainian hairdresser this morning for me.
I was expecting something crazy, Mike. You should.
I leave the craziness to
I wasn't sure how long you were going to leave that hat on for. I was thinking we're going to have another anonymous streamer like Victor.
It's too hot out. It's too hot today. I can't be dealing with it. So
with your hair, Mike. What have you done? No, seriously, man. You look good.
Yeah,
you look like,
you know what? First time I've been to this hairdresser, and she did a really good job. Gotta say.
Yeah, you look like you just had a nice payout.
Fresh.
Looks really cool.
Yeah. So there you go.
I wanted to jump in and say congratulations. I think it's just wonderful hearing that your daughter was born, and I can't imagine how well I can't imagine because that first week, and I know Mike can imagine as well. That first week is just diapers and no sleep.
Oh yeah,
wonderful! Congratulations.
It's only sleep.
Thank you very much,
Jonatan. I know it was a while ago for you, man, but it's only sleep that first week. That first week's the honeymoon. It's like amazing. You get them sleep, feed, poo. That's it. So
that first week you're in this bubble. It's like you don't really know what's going on. You can't really believe there's a life here, and it's completely new, and it's just so small and tiny and fragile, and it's just you don't really know if it's real or not, right? And then you kind of slowly but surely start to get out of that bubble and this screaming and lack of sleep is very real.
and then comes colic, then comes the upset stomachs and all the other stuff, and then they start talking, and then once they start talking, that's it. All bets are off. Yeah. So enjoy it.
Wow,
enjoy
USD
it now.
CHF. Have you guys seen what's going on with USD CHF?
What did you do?
Holy macaroni with cheese.
You might be nice TP.
Whoa, you know what I did though? You know what I did? I increased my TP like immensely. I'm up 5% on this trade.
Nice.
It's almost gonna hit that TP. Holy shit.
Hang on, what is your TP though? What is your TP?
Fuck this. I'm gonna close the trade. I am closing the trade. There's no way I'm holding this open. Fuck it.
I'd be
I'm in conversation with the so Alex closed the trade and he's like, watch it run. And that's exactly what it did. Wow, that's amazing. Okay, so I'm up 7.5% on the account. I went from break even yesterday to being 7.5% up today.
How much did you risk?
Wow.
How much did you risk?
Everything. Everything.
Full
margin. More than full margin.
Wow, that's incredible. Right, my trade hit TP. Griff got a daughter. Like, everything is in line. The universe is speaking its clear language. All right. And I did a little bit of swearing as well, and I'm sorry for that. Everyone watching that might have kids around, probably not. I don't know why you would be watching this with kids around, but if you do, I apologize for that. I'm gonna leave you two to it. Again, congratulations, Griff. I didn't think you were gonna go, come on today. Like I would just recommend like spend as much time as you could with your new daughter. Like every single minute, every single hour is just it's precious. Because honestly, like you like my son's 7 and time just flies. Like time just flies. All of a sudden,
I feel that already.
Yeah, and like it's like all of a sudden you realize that, like I'm working quite a lot, right? Like I wouldn't say that I'm a workaholic. Like I'm more of a procrastinating workaholic, probably something like that. So like I do work a lot, and sometimes I kind of like I think like why am I working? And I look at my family and I look at my son and I'm like, I'm working so that I can give them the life that I want to give them, and make the amount of money so that I can work less in the future. But then I'm thinking like that's the same type of thinking that I had 7 years ago when he was born. It's been 7 years of thinking that way. So now I'm at the stage where I kind of like I take a step back, take the foot off the gas and really try to spend more time with the kids and the family. And the earlier you realize that, I think, man, it's super important. So yeah.
But you know what? You've hit on a really important point there, Jonatan. Though it is so hard to find that balance. It's so hard to find that balance, because on the one hand, I'm not saying this is just for men. This is for women as well. But you are struggling with this. Like on the one hand, I've got to earn the money. I want to give them the life that they deserve, and everything costs money, right? And so you've got to work for that. But on the other hand, you do want to spend time with them, right? You don't want to miss out on that childhood. You don't want to miss out on the time. It's such a hard balance. And I can totally relate to what you're saying. So, but Griff,
live stream.
Griff, we've got to remember, right? Griff takes a trade like once every full moon or something. So he's got to come on live stream just in case the stars align. Baby or no baby, there's got to be something happening, right? So yeah.
I really appreciate the advice. No, that's great. It's fantastic that I can see a bunch of people saying congrats in the chat as well. I really appreciate all of you guys. Thank you so much. It's very kind, and the advice is very helpful. I'll have to keep that in mind, because I'm definitely prone to falling in head over heels into work and just getting lost, and then time's gone. And I'm already seeing in this 1 week how my daughter has changed so much already. So I definitely will keep that in mind. I'll do my best.
Yeah, there's going to come a time when when she starts speaking and she's going to ask for your attention, and you're going to be on the phone looking at a trade or asking a message, and it's like it's really in those moments where you realize like, okay, what's most important here? You look at your child and you look at work or whatever, and it's like you really, and I think this is your first kid, right? So you know what to say, like life begins when you have kids, and that's I truly believe that, like when you have your first kid, you're gonna change, like you're completely changed. Speaking of kids, look at LJ. What's up, man? How's it going?
How you doing, Tim?
What a segue. Hi, mate.
Oh dear.
Dude, LJ, did you see that trade?
No, I missed it. My cooking was burning and it set off all the alarms and stuff.
Holy shit! I forgot that. You remind me. I gotta check the oven. I'll have to jump off. All right, take care. Be back later.
See you. Thanks.
I just destroyed my dinner.
No. As long as you didn't.
Yeah, I forgot. No. Yeah, I just forgot about it for like 5, 6, 7 minutes looking at charts, and then it had gone way past. I was like,
oh, that's the worst.
Henry, it's kids that he knows of, right? Let's just be clear. It's kids that he knows of. They may already exist. He just doesn't know.
I've just got a cat, a feline as a child. So.
Exactly. It's a very expensive child that he already has is in feline form. My one piece of advice, just talking about parenting, I know this is a trading stream, so we're going to go back to trading, but Griff, my one piece of advice actually is you do you, right? You're going to have everyone coming to you saying, oh, do this, I'll do that, let the child cry it out, or make sure you keep them in with you. Everyone's going to have an opinion, right? just follow your gut, mate. Follow your instincts and follow your gut, right? Don't let anyone tell you what to do. Do you and your missus, you do it your way, right? And your instincts will guide you, all right? So
thanks,
that's the best thing I can tell you, because otherwise, honestly, you get overwhelmed with the advice, and it's like trying to decide between ICT and SMC and all the other different trading ways, and you just get analysis paralysis, and meanwhile baby's crying and booing everywhere. So just go with your instinct.
It was great. I logged on today. I wasn't expecting to be receiving advice. I'm so happy to learn more about that. But yeah, now maybe we can give some advice, some trading advice.
Amen to that. Well, Jonathan's already given the advice to say take profit on USD CHF, which looks like a good one. It's come into a nice area already, although the 15-minute closed without much of a wick. So this is an old zone that I have going back all the way back here, and the reason for it is it bounced off here, and it wasn't. I mean, it touched a few times, and it bounced off again here, and it's pushed through. But these zones tend to be still relatively useful for keeping things. You can see it's been touched off there, and it's powered through. It's a little bit more weakened now, but again, price pushed off from it. So still has some validity to it, probably less so than it did before, but it looks like a nice area. We've come up to this point here, so we'll see. I wouldn't be looking for any sells just yet until you see the high of this taken, which it might happen in the next few minutes actually. But yeah, we'll see. So what you've been looking at, Griff, other than nappies, have you looked at any trades?
Last week I've been out of the charts. I mean, the only time I was really taking a look was Asian session, because that's the middle of the night when I was awake with the baby. And yeah, nothing really set up last week, which I'm quite lucky for, because the week before, obviously, I think I showed you guys there were like 3 or 4 trades I took all at once. But yeah, last week there was literally nothing. So being patient again, the usual.
Exactly. I reckon in celebration of your daughter being born, I think today is the day that LJ and I managed to convince you to join us and come to the dark side and start just taking day trades.
Yeah.
I think it's going to be a bit like, wetting the baby's head. Like when my kids were born, first thing I did was I went and grabbed a bottle of whiskey and grabbed a glass of nice single malt, wet the baby's head, toast the earth, right? That's what we're going to do today, is we're going to get you to take a scalpy trade.
Well, you know what, to be fair, there was, I don't think we really touched on it, because I hit profit target on a bunch of my prop firm challenges, would have been 2 weeks ago. And I remember I mentioned to you guys the profitable trading days. I didn't realize profitable trading days was a thing. And I did take a scalp. I did. I took a little trade. I dropped down to the lower time frames and it lost. So it's because I took a trade and I tried to close it out at $500 for the day, and it must have been really volatile because it ended up closing at 450. So I was like, right, I'm gonna take another trade, just a tiny one, and I'm willing for it to come back 500, so kind of back to where I was, back to break even. And I was like, I just need to make $50, but it only needs to move in my direction a tiny bit. But unfortunately, it never moved in my direction at all, and it just went completely against me. So yeah, that 500 profit was wiped, and I'm just back to where I was. Still above the profit target though. But yeah, I guess I took a scalp.
Well, there you go, mate. There you go. We you got to ease yourself into these things. So yeah.
You get the newborn to crawl up to line out the assets and get them to crawl up and pick one, and then you go off that, right?
Yeah, that's how I'll do it. Maybe she can pass me my.
I'll tell you what, if she's doing that after a week, then that's a damn intelligent baby. So yeah, we have had the CPI earlier on a few hours ago. So Euro news, inflation rates, all that stuff have come out. I haven't had a chance to look in great detail, so we'll look at that in a minute. But in the meantime, we do have just over 2.5 hours until the jolts come out. for the US dollar. So that's the other thing just to bear in mind, is that there might be some movement later on. We might just see a little bit of chop or a little bit of ranging while the markets try and position themselves ready for the jobs to come out, and obviously for New York Open as well. Let's have a look at the Forex strength scores, though, in the meantime. So at the moment, the dollar is showing a lot of strength, which would tie in with that CHF trade that Jonatan took. Very nice CHF trade. Although the CHF isn't necessarily showing a lot of weakness today. It's actually you guys down under. I don't know what you're doing, LJ, selling off your Aussie holdings. You know, it's the governor of the Royal Bank of Australia here with us, and he's decided just to sell off the crown jewels, you know, and get rid of all of his Aussie dollars. So yeah, what's been happening, LJ?
Look, I don't know. They're all off. Aussie dollar though isn't doing too bad. But I guess the larger complex off again today. We did have some earlier bits and pieces out, balance of payments, that kind of stuff for Australia, and the trade index. I guess that was a bit of nothing major concern, but you know, that's just the moves from today, as well as forward indicators, that kind of stuff. I think it was mainly company profits underperformed, so that was the main pull there for Australia.
Looking at yesterday, obviously the dollar was very, very weak yesterday, particularly against the Aussie, and the New Zealand would have been one that would have had a bit of a divergence yesterday. So that's maybe one to have a look at for us today, is New Zealand dollar, US dollar. I tend to avoid it because of the just the limited ATR on it. But when you do have a significant divergence on the strengths, it's maybe one worth looking at. The other one might be the Aussie dollar CAD as well. So we'll jump into those in a minute. But let's just have a look, see if USD CHF is doing anything. It isn't. You might see a potential trade because we're in this area. I do like this area because it's bounced off it a few times. So it might be a nice scalpy trade, even just down to here. But I want to see a proper setup for it. At the moment, I'm not seeing any clear setups for it. In fact, the only clear setup I'm seeing is a buy signal from here. So you've got this price comes down on the 1 minute, wicks back up, comes down again, retests the wick, and off it goes. So, you know, that would have been a potential very, very quick couple of minute scalp. But now that it's created this kind of changing directional bearish candle, again, see if we get a retest of this wick and see if it pushes down with a wick rejection or an engulfing candle to the downside. There you go. It didn't, and it's carried on going. So
I think there's a bit more height in dollar yen as well. Euro and pound is still, euro dollar and pound dollar is still pushing down also. So yeah, until I think they all sort of complete their move, there's probably a bit more height in dollar franc as well. Yeah.
Those of you with us yesterday would have seen that I did take a trade on Euro USD. It was this trade here. And a shout out to Henry. Henry, I appreciate you being on me with the parenting advice, but I think I need to start taking your advice as well, mate. Because I didn't take part. Was it you, Henry? I can't remember. But somebody said to take partials, and I laughed and said, "Oh, I don't take partials." And well, basically what happened was I then decided that I knew better than the markets, and I was foolishly trying to sell. Basically, I tried to sell there, tried to sell there, I tried to sell there, I tried to sell there, tried to sell there, and then tried to sell there, and basically death by 1,000 cuts. And an account that I was up 2%, I ended up blowing on the daily loss limit because I was so convinced that Euro USD was going to sell down. Now, the reasons for why it was going to sell down were actually still valid because I believed that we were going to come down and take this area. And sure enough, it did come down and take that area, but only after it had come and retested this stronger area. And this stronger area, reason I have it marked out is because on the 4-day, you can see here we have this nice engulfing candle which didn't respect this one, but it actually created an entire engulfing here, and then pushed further down. So it's a really nice strong area. I think it's on the 3-day as well. You can see it there as well. So a nice strong area for potential movement. This is the weekly area, hence why it's even stronger. So I don't think we're necessarily going to see a change of direction here. I don't think we're going to suddenly see price, push on down to the, the 113s or the 112s or anything like that. But I do think on an intraday trade, you can look for these kind of areas and look for a setup on those lower time frames. And sure enough, what did it do when it got into that area? Well, it created a nice, great big engulfing candle, pushing down, and it's not looked back ever since, basically, and it's just kept on going. Took the level that I was talking about and is going further still. So yeah, it would have been a nice trade in the end, but hey ho, just the way it goes. So yeah. Gold analysis, and Mateusz is asking for gold as well. Let's have a look at gold.
We often get questions about gold.
Gold is just, it's the
yeah.
I don't know what it is. It's the adrenaline junkie in us.
Yeah,
that wants
I was
gold.
going to say I'd like to share my thoughts on gold, and I think a lot of people always asking whenever we're on the live stream, loads and loads of people asking for a gold analysis, and I'm not passing judgment on the people here that have asked for gold analysis, but I feel like gold is one of the first kind of trading symbols you get started with. I think a lot of people will look at gold because that's one where you see people making $2,000 days. You know what I mean? Those kind of YouTube videos. I think gold definitely has connotations of get rich quick. Mike's vanished.
Sorry,
here he is.
I had to blow my nose.
I'm scanning over everything. That's why I'm
LJ is planning his market moves. Yeah, I completely agree with you, Griff. The thing with gold is that gold is, for all of us, is synonymous with wealth, right? So if you're able to trade it, it automatically draws you in, doesn't it?
That's interesting, yeah.
So, even as kids, we're taught, gold is number one, right? You go to the Olympics, you win a gold medal, right? So there's all these kind of different, psychological connotations with it. And as an asset to trade, it moves. If you're looking for liquidity, if you're looking for an asset that has a decent ATR that's going to have movement, especially on intraday trades, you're gonna rarely be disappointed with gold. If you know what you're doing and you know how to do it, and you don't get cut by 1,000 cuts and killed by 1,000 cuts like I do, then it can work out quite nicely. Gold, this was the trade that we were talking about earlier on ABL, wasn't it, LJ? We were saying about the overnight. We saw this kind of breakout of this structure here. Nice big engulfing candle to the downside. Here he is, he's back again. Now what?
So I got an alert on USD CAD, right? So it looks like USD CAD is kind of breaking out, showing a sort of structure on the lower time frames. And I just want to show you, like, the trade that I just took on USD CAD, USD CHF. Like, I didn't realize the profit, but I think I made like 5% on the account on that trade, which means this trade, if it hits that TP, then I'll be funded on this account today on the live stream, which means I went from being at 1% to 10% on the live stream, which means I'm looking at you, LJ. might have some competition here in a fastest time to funding.
What is it? Is it a hypergrowth?
Look at yeah. So look at the 1 minute here. Now this, to me, if you look at the 5 minute, right, you have this area right here. It's a very strong 5 minute candle to the upside. We go into the 1 minute. It has established support here on the breakout level. Looks like we have some momentum here backing up this breakout. Looks good. and we have to get up to that level right there, which I think makes a lot of sense on the 4 hour as well. And if you look at this, you see a double bottom. Look at the daily, very low levels on the daily, high time frame retest of a daily level. We can look at the weekly. Look at that break and retest on the weekly. Could potentially see buyers stepping in right here, right now. And we have in the 1 minute the break continuing, and we are on our way to funding. I feel like this is what happens right before you blow our account. So at the end of the day, you will probably see me blow this account. But I am,
as he chases that final $10 or something.
Yeah, it's a small move to the upside. And
what's your TP?
My TP is what's my TP? My TP is 1.37604. Man, that's a pretty big move. We have jolts coming up as well. You know what? I'm gonna lower that TP. I can't be greedy. I am going to be greedy. I don't care. What am I saying? Of course I'm going to be greedy. I'm not going to move.
Looks like a good trade. I like the look of that.
Thank you, Griff. You're like the only sensible person here. So when you say it's a good trade, I do believe you.
That's a bit harsh. That's a bit harsh. I know I came in with a paper hat on my head, but you know, that was only because you got everyone to go, "Oh, Michael, look at your haircut when he comes on stream."
Yeah, but this comment right here kind of tells me that they're looking for they're looking for normal people. It's like, where's Victor?
Normal people. Hang on a second. All right, let's do it like that.
Yeah.
Okay. All right, just have it like that.
No, Mike. That was good. Okay. Well, I will no longer disturb you. I will go eat my lunch. And okay, we're moving down now. Looks like we'll possibly see a fake cat. Does not matter.
You got distracted, Jonatan.
Yeah, doesn't matter. Yeah. Raphael, take a deep breath.
He doesn't know how to, Raph. He doesn't know how to, Raph.
Okay.
Oh, dear. Always a pleasure to see you, Jonathan.
What's a
Good luck
room
with buying the account.
This is the question here. You might consider having a room monitor to answer questions. What is that?
We have a room monitor.
Oh, you mean like a moderator?
We have Yasin.
It looks like we had him. I don't know where.
I'm sure I saw him. But I mean, if there's questions like seriously, then yeah. But I mean, okay. So you want this one, Stretch? So this is mainly forex trading. Is that what you want us to answer?
You are correct. We are mainly forex trading because the 5ers is a prop firm funding forex traders.
Exactly. But we do trade the indices, and we do trade Bitcoin, and we do trade.
He heard someone say Yasin, and he's ran to the PC.
Speak of him, shit,
they got me. All right, guys. I'll see you later.
We love Yasin. Yasin does the hard work, for us. He keeps an eye on all those questions that we don't know the answers to, and then gives us all the answers. So yeah. Yeah, there you go. You can ask Void as well. There's a load of guys here and girls here, Stretch, that will answer your questions if you need them answered. You got Void, you got Rafa, you got Haresh, you got loads of people. Got Henry, loads of people in here, regulars watching us. So ask away, and one of them will answer. Or we do keep an eye on the chat. But we're also, we're just having a look at the charts. So bear
also
with us
in
and answer straight away.
AlphaBeta Labs, right? That might be a good place to get answers to your questions.
You see, I love the way you did that, Griff. I love the way you did that, mate. That was as smooth as a baby's bottom. The AlphaBetaLab.com, guys. That is where you need to go. That is where you need to go for the real secret sauce. The link is on the screen. If you haven't already joined us, where have you been? We are growing the single only free educational community by traders for traders. We've been running it for the last couple of months, and we have massive plans for this community. So yeah, make sure you get in now, because in a few years from now, you guys will look back and go, I was there when it started. I was there when Mike had a paper bag on his head, and now look at him, disheveled and living homeless.
Paper bag,
and they got rid of him from ABL for going absolutely bonkers. So get in now before they realize what they've done. But there you go. If you
on ABL, haven't we?
I had a tin hat as well once.
Yeah.
You know, I was asked for a tin hat. I came on with a tin hat. But yes, in there, guys, if you have questions related to the 5ers services, drop them in, and Yasin will be able to answer those. Yasin, don't oversell it, mate. The trading related questions, don't guarantee anything. Don't overpromise, mate. We'll try. But yeah. So yeah, exactly. Loads of lovely people in ABL, all on the same journey. That is exactly right, my friend. So yeah. Somebody was asking about EUR USD.
Got up right now.
This is LJ getting used to TradingView. LJ isn't used to TradingView, so this is LJ's
figuring out
LJ
horizontal
kind of figuring
raise.
out the ins and outs of TradingView.
And yeah, these are a couple levels we marked out from last week on stream on ABL and then on the Discord and stuff as well. We were looking at this just earlier in ABL as far as dollar index, a bit of a retracement up into this level, and then possible rejection. We've tapped it perfectly at this point. Seeing Euro start to turn around here. We've come down towards this 50 cent. The question was whether we'd get into this slightly lower band, which I've been keeping an eye on just now. This is what I was focused on, looking to pull the trigger soon. Because ultimately, I'd like to see an eventual continuation of this. We've sort of getting this pullback now. You're going to get some nice areas to enter in here and possibly look for a move up towards 115. Dollar yen doing similar, just like Jonatan was talking about dollar franc. We had this move yesterday into this lower band for a possible upside, bit of a, just retrace after coming down so heavily, all the way from, what did we top out? 146 somewhere, 146.25, 30, somewhere around there. So yeah, again, we're now looking as though there might be some decent dollar selling opportunities coming in. I would have liked to see dollar yen maybe come a touch higher and sort of get a bit of a double top, just for a bit of extra coverage. But we do seem to be turning around now. So I'm keeping an eye on that. We're not out the woods yet. It hasn't haven't fully started running, but it's looking starting to look good. So.
Yeah, I can see us. What's that?
I said, nice work getting into TradingView, LJ. Let me know if I can.
You know what?
I'm trying, mate. I'm trying.
You're doing.
It's my new child. That's it.
That is the mark of a trader, though. If you imagine, LJ's been trading for 13 years, right, and only now is he getting into TradingView, shows you what the platforms and what the terminals that LJ's using. Yeah. He's using the actual terminals. He's using the actual MT5s and all that stuff to trade
trenches.
This guy knows this stuff.
Broker terminals, all that kind of stuff. I'm just so used to it. Like everything's so fluid for me. So going in,
I get you.
Using trading.
Scruff is the same. Scruff is the same. Gary Langley, Scruffy. I don't think I very rarely or almost never see him using TradingView. He almost always marks up his charts on his terminal as well. So yeah. There's a question here. I think this can only be for LJ. So Henry's asking you, LJ, your fellow compatriot, where does price come from, and what is the meaning of price? And Raf has actually answered for you, and he said LJ controls the price.
Yeah, I control the price. I am the price.
He is the price master.
LJ is the broker.
LJ is the broker. And what happens when price dies? When price dies, Henry, then we all go home and mourn the death.
Yes.
Only to come back the next day and try all over again.
Yeah.
Oh dear. At what point do you enter? Like, how many confirmations do you wait for? That depends on all of us, really, doesn't it? Griff, let's go with you first of all, shall we? How many confirmations do you go for?
I guess I'll take the inverted approach where I look for how many things are going against the trade to determine whether or not I should be taking it. So
Okay.
rather than, like, I've got my setups, I've got my patterns, and if the pattern forms, then what I'm looking for is how many things are wrong with the setup. Because and the reason I do that is because I will only take trades which are nearly perfect or are perfect. So if there's 2 things or more which are kind of against it, then I won't take the trade. But obviously, if there's something really bad going against the trade, like maybe one really big warning sign, like a huge wick or a massive engulfing candle, then I won't take it. I kind of have this value system that I've built where it's like, yeah, warning signs, I'd call them. If there's 1 or 2 warning signs, that's my limit. But yeah, I guess that's the opposite of a confirmation, if you know what I mean. So rather than looking for 10 confirmations, I'm looking for as few warning signs as possible. So
Yeah.
different perspective for you.
Nice. It's a nice way of looking at it, actually. I can see LJ is drawing his masterful trend lines over on TradingView. You got an eye on the NAS today, LJ.
Yeah, I had a bit of an eye on the NAS as well. Looking at this kind of area up here, whether we can actually get momentum beyond this or not, is the question. I'm ultimately looking for potentially a bit of a pullback down to the slower area we had yesterday. There's also the max pain level for options is about 21,200 as well. So I'm looking to see if we can get another drawdown there at some point, or conversely,
you caught some nice entries yesterday, didn't you?
Yeah, I bought in through here. It was at 21,186 about here. Stuff that. I took profit early at where was it? It was like the midpoint sort of there. So about 50% of the move. But that's all I was looking for yesterday. And then we ran a bit further. After that, I sat out. I didn't short or jump back into the longs here. I sort of wrapped up my trading yesterday with that, and then I went back over to Euro instead. But yeah, so keeping an eye on this to see whether this ends up breaking out further and we potentially get a couple 100 points run higher, or if this wick here eventually fails and we get another return to the downside. At the minute, obviously, we still got the news for the US coming out later. So I think that might be the ultimate catalyst. But if there's any short-term moves just here, then I'll look at that as well.
Yeah.
What else is interesting?
We've got Void giving you a tip here, LJ. When you click the stars next to your preferred tools and time frame, it adds it to your favorites, so you can become more fluid.
Yeah, like
what's my favorite?
Mike has like 30 time frames across the top.
Favorite?
You can do that too.
It creates it for you. If you click on the time frames, for example, right, where you've got your time frames, and just add see those little stars.
Yeah.
Right. It will then create favorites for you automatically. So
yeah, I need to go through and just like set everything up in one go.
My top trading view tip is just to set as many templates as possible. Like just template everything, because it makes it so much easier. You're not having to set your colorway each time, like your risk reward tool, your drawings, everything. You can just have it all in one template, and it makes it so much easier. Just one click. That's my biggest tip.
Yeah, definitely. That's like the same reason I've used C Trader for so long, because you can set all that up and and then just bang. And then it's also just like TradingView's cloud. There weren't many cloud based platforms around a while ago, so C Trader was really good back then, and that's why.
And Henry's got a great one as well. Is when you want to kind of just squeeze the scale down. So if you double click on just the scale line, it will then shrink it down and gives you the full view of the chart, which is nice. We do have a trading question though here from Marcin. Good to see you, Marcin. So he's asking about the moving average 66 as a strong place for a retest or breakout on the 15 or the half hour. I've never tried it. Is it one that I know you like your moving averages, LJ? Have you looked at it?
Not the 66.
Yeah. Marcin, just to be clear, yeah. Marcin, could you just clarify which moving average you're talking about? Are you talking about EMAs, SMAs? Which one are you talking about? And we can pull that up on the chart and have a look.
Is he referring to GU as well? Do we know the symbol?
Yeah, he hasn't said. So yeah, Marcin, let us know which one are you referring to, and we'll take a look for you, my friend.
I mean, at the end of the day, moving averages, you're just measuring the average velocity of the past X number of candles. That's all it is. So, whatever number specifically you want to measure, it's all kind of same thing. You're just taking in slightly more data or slightly less. And it's more just comparing them, between each other. So then you're looking at it's just a good way to visualize angular momentum of the market, whether it's accelerating or decelerating. By having you have a 10, a 20, 50, 100, 200, right?
Okay.
So,
so I'm assuming that you're talking about the simple moving average then, Marcin. I'm not clear on which one you're referring to. But he says he's using it on many charts. So so let's pull it up. I've got a moving average.
Jump over to yours. I've got a few other trades I gotta on other platforms to shift around at the minute. Hang on.
No worries. Let me just do that here, and let's swap around. There we go. So there we go. So we're on the 15-minute on the NAS. So let's have a look and see. It's not jumping out to me. I mean, just looking at it on the NAS, right? It's kind of is sitting above it, then coming below it. It's not really. I mean, yes, you're catching some moves bouncing off it. You've somewhat got one here as well. I would need to look into it a bit more, Marcin, if I'm honest, and I'd need to do a bit of back testing. But I would say, like with anything we're trading, if you have an edge that you can see, then trade it. Back test it, and if you've got an edge on it, then trade it.
I was going to say, you have some moving averages though, Mike, and candles as well, I guess, for that matter, rather. That are off center to the standard, block numbers that people look at, because that basically translates to 66 by 15 minutes. That's 16 and a half hour. And then on the 30-minute, 8.25 or something, past hours. I guess if you look at that, as far as you're looking at the past couple trading sessions, it will kind of line up, I suppose.
Yeah, there will be confluence.
Through to Asia or something.
It might be. I mean, Marcin. So what I look at, there's an interesting one, right? It's hugging it a lot more closer on the 11-minute and the 7-minute, right? So that might not give you confluence. The 14-minute, maybe. You really need to kind of just understand your rules and what is the confluence, right? What is it that you're looking for? I mean, this is just the NAS. Let's go and use something else. Let's go and use Griff. You mentioned GU, so let's go and see what GU looks like with it. GU is looking a little bit nicer, but I suppose for me, I use moving averages, and I think you do as well, LJ, as an added confluence, right? Griff uses, arguments against his trades. I look for arguments for my trades to a certain extent, right? So, I use alternative time frames because they give me a different view on a chart that you wouldn't see otherwise. So, for example, on the daily, let's say, if I look at these daily charts, right, okay, yeah, I can see we've come down, we've kind of consolidated, and okay, we've pushed up, and we've created this kind of little U shape at the moment. But if I then take it down, for example, the 14-hour, it just gives me a little bit more of a picture as how it's moved around during that time. The 12 hours similar, but the 11-hour, for example, the 11 hours are a really nice one, and the reason for that is that I like to look for inside bars as major liquidity levels, and then I look for engulfing candles as confirmations of price direction change, right? So doesn't necessarily mean, because it's very hard to know on an 11-hour when it's forming, that it's going to be an engulfing candle to the downside or to the upside, right? So what I would look for is I would look for retests of those engulfing candles. So here, for example, you had a really nice retest of this one here. So it happened immediately straight afterwards. So you could have turned around and said, right, okay, if this is, where's my square gone? There it is. If this is my zone, if it comes back into this zone, then I'm going to start looking for sells, hypothetically. Stick my stop losses above the wick and sell on down. If you add, or if I were to add, for example, any moving average, whether it be the 66 or any others, I'd be using that to say, right, okay, is there something to target towards, right? So is there something to use as an added confluence to say, yeah, look, we're kind of far away from this moving average, so there's going to be a magnet pulling it back down.
They work, they work exactly what you're saying, Mike. They work really well as like retracement points, because obviously moving averages are basically just a lagged indicator of price. So if you're looking for price to come back into some relative sort of pocket level, or conversely a retracement higher into old key levels, that can be quite helpful for that, just measuring out. It kind of comes down to like an ATR thing. Like you're going to know that price isn't just going to absolutely fly off unless you've got some large structural macro fundamental shift. So they're good points to target with that for retracements and that sort of thing.
Yeah. Griff, do you use them at all?
I've looked into them because obviously being a trend trader, they're probably quite beneficial. But I've already got such strict criteria that it would just reduce my trade frequency even more, which that's the only reason I haven't implemented it. But moving averages are great. Like you say, it's kind of like, I think one of you have said this before, actually. It's like dynamic support and resistance, which is great to have alongside your regular like levels. It's definitely a very cool thing. I think the main issue is everyone has different moving average. Ideally you want to have the most common so that you have a good idea what everyone's looking at, and I think a lot of people use exponential moving average. I get that impression, but yeah, it depends on your time frame. And also
LJ is the original contrarian. That's why he uses SMAs. He just refuses to follow the herd and only uses SMAs instead of EMAs.
It depends on, like Griff was saying, your trade time frame, that kind of thing. Like if you're trading much shorter term, an EMA is probably going to be better because you're concerned a lot more with what's immediately happening now or in the past 3 hours or something. I generally look at like a larger macro picture in amongst all of that stuff, and that's sort of where I'm looking for larger block orders over like 10 hours, like a couple sessions or multiple days, etc. And so in that sense, that past overall summation of price action for me is more important, and sometimes it gets distorted by the like today's or yesterday's move or something because of like headlines and that sort of thing. So yeah, it totally depends on what your time frame expectation for your trade is.
Indeed. It's it was interesting you said, Griff, about looking at the common moving averages that others are looking at. Wouldn't there be an argument to be said that if you looked at the ones that people aren't looking at, that you're potentially going to also find opportunities?
Yeah,
do you see what I mean? Kind of counter to following, much like LJ saying, rather than following the herd, and similarly to what I do with my 7 and 11 moving, time frames. look at things that others aren't looking at and see, is there something in there that maybe gives you a greater edge?
Yeah, I think with the moving average that I mentioned, like having the most common one, the reason you'd want that is so that you can trade against the people using that. You don't want to go with the herd. If the most common moving average is a 20 EMA, you know that a lot of people are going to be entering around that area, and based on that, you can probably imagine where their stop loss is, and you can trade against them. So yeah, I mean using it as a tool against the masses.
Yeah, 50 and 200 are going to be your main two. I mean, people still use them in stocks and that sort of thing as well as just good general gauges, even institutional level. It's not like they're just one piece of the puzzle, though. They're just giving you a immediate, graphical representation to then go and do further research. They're not some.
And none of them are going to be
right,
None of them's going to be the golden rule of every time it hits this moving average, it is going to bounce. That's just, there's nothing is going to be that 100% accurate. Mountain ranges, apologies, didn't see this earlier, but it does remind me of a very quick thing just to remind everybody of, so we'll be back right after this.
Listen up, traders, we got a new competition with massive prizes launching at the 5ers. The top traders, they will win high stakes accounts, and everyone in the top 100 will get a prize, including hub credits and bootcamp accounts. We're actually doing this every single Wednesday, week after week, so you will always have a chance to win. It's fast, it's free, and it's easy. All you have to do is just sign into the 5ers Hub, click on the contest on the left menu, and join the upcoming competition. We hope to see you all there. Good luck.
There you go. So thank you for the reminder, Mountain. And follow-up question from Mountain. I've completed learning SMC and ICT. My question is how to make our strategy. Could you please suggest? Well, this is a really nice can of worms to open up with the 4 minutes left to go on our segment. We always love a bit of ICT and SMC on here. Mountain range. I'm going to tell you my view on ICT and SMC is this. Ignore the people behind it. Ignore the guy who claims to be the man who wrote the algorithm. Ignore everything that he says in that respect. If you have spent the time looking at and studying SMC and ICT, I pray to God that you haven't paid for it. But if you've spent the time looking at it, go and see if you can go and back test and see the setups. So whatever it was that you learned, go back on TradingView. So you can go and use the replay function, which you'll find up here. So go and use replay and take it back. And then what you do is it will show you the chart as it was at that moment. And then you can play it out and you can mark out your charts and see, can you find the setups using ICT or SMC? If you can, then your interpretation of the markets can be valid. But just go and back test it, go and understand it, and see if there's something that's crying out to you and shouting out at you and glaringly obvious, right? Each and every one of us here, right? We've got the likes of Victor, we've got the likes of Rich, we've got Jonatan. Amazing traders, right? And you've got people who each have their own set of criteria for entering and exiting and positioning and risk and all those things. But that's been spent over endless hours, either back testing or forward testing, or blowing accounts in my case, to try and find your edge, to try and find the way that you see the market. So I wouldn't say go away and just follow the rule book. Take elements from it and see what makes sense to you. If it makes sense, go and see if you can find it. If you can find it, then back test it and kind of give yourself an understanding as to whether there's a probability of you being right more often than not. And even if you're not, then you can just adjust your risk accordingly to potentially still be profitable. So that would be my advice. I don't know, gents, do you have any kind of additional comments to that?
Yeah, there's one thing I'd say, and that is what I understand with ICT is that there's like 30 different setups. So it's a bit overwhelming. And I think the best thing you can do is just choose 2 or 3 either setups or confluences that resonate with you, whether that's, you know, session-based confluences, pattern-based confluences. Try stacking them up in different ways with different risk and reward systems and backtest that, see and then see if you can build a profitable system based on that, because it'll be unique to you as well. I think a lot of people, they try to use all of the concepts, but you actually only need like 2 or 3 stacks on top of each other to be profitable.
Yeah, exactly that. That is almost it for today from us. LJ, any last comments from you? Should we buy or sell the Aussie dollar?
Aussie dollar, I think, is a buy. I think we're ultimately heading towards 66, and then there's 66.80 above that. It's holding up quite nicely.
It is actually. It's in a nice area as well.
You know, euro and pound continuing to come off. So if we get a bit of a turn in the dollar some point this evening, Aussie dollar could be in for a shot there. Conversely, still watch out for headlines, of course. If you get something knocks stocks off, Aussie dollar can just impulsively drop based on that risk-off profile that it carries, unlike some of the other currencies. But apart from that, yeah, I'd say just keep watching DXY. We're at a pretty interesting level here. Either we'll fail, capitulate lower, or we might get a breakout to the upside. Most likely, we're waiting for news now, to be honest, though. So,
yeah, I would say so.
And the only final thing is that hopefully we'll be better soon, both you and me, Mike.
I'm quite.
Neither of us are
proud of
still
the fact
good,
that I
guys.
haven't.
We're still pretty rough. Like
I haven't sniffled as much as I was, you know, this morning or later on. Like this morning, I had to drop off the stream like 4 times to blow my nose. So I'm quite proud of myself.
I got worse.
I only
and
did it once.
Loaded up on medicine.
So yeah, but it's all good. It's all good. Guys, we have got Victor and Deanna waiting in the wings to take you through the next segment of the session. So don't go anywhere. We'll be right back after this. Griff, LJ, a pleasure as always to be on with you guys. We'll see you next time.
Thanks.
See you guys.
And yes, we are back with Deanna, Dr. Cole, and myself, Pedro. I mean, Victor. How is everyone doing? Deanna, how are you today?
I'm doing well. How are you, Victor? Good to see you.
I'm enjoying my day as usual, but especially today, and especially with a co-host as yourself. There's not enough time, but I would like to these streams to be longer so we can talk about more in depth about trading, and not just the charts, but your experience as well. In general, not necessarily now, but in general, that's what I'm thinking about. How was your trading today so far? What are you looking at?
Well, I just woke up about an hour ago, so no trading yet, but I'll be looking at the indices and at gold as usual. So mostly the indices.
Mm-hmm. All right. Yes, I keep on forgetting that you're on the other side of the little pond. To me, when you said just woke up, obviously I had a half a day already behind me. But no, that's makes sense, obviously, because you're trading the US session, which is only starting, hasn't started yet, the equities in any case. But I was looking at a couple of things before because I was an hour ago already online streaming you guys. So there was something we were talking about the trade. I'm not going to talk about your Jonatan's trade, because that one, I think, I'm not sure where his TP was, but I think that hit TP big time. He probably is already funded and scaled up his account. I don't know. I assume, I haven't seen his account, but I think he mentioned something into that extent. So, but what I can say and what we can look at is euro dollar, GU, and perhaps anything else you guys have as requests for us. But it doesn't have to be charts only. We can talk about, your experiences you're having, the setbacks you have. I've been very interestingly listening to the EMA discussion the gentleman had before us. I think it's always good to talk about these things with other traders, because that can broaden your perspective, your insight. There are little things that you may or may not have thought about before. And, they can elevate. By knowing this, you can apply. It might be a little thing like dynamic support and resistance. Maybe that's that little oomph you need in your strategy to increase your expectancy, start being profitable. Those little things can make a big difference. So let us know in the chat. And while you're typing your question, hit the like button and subscribe to our channel if you're not a subscriber yet. Not long ago, we reached 70,000 subscribers, and we're not done yet. We're just getting started. Deanna, what are you thinking? We have one question here. Venetia says Jonatan had a good trade today. Yes, he had. Divergence. Marcin is talking about divergence. Do you use divergence in your trading, Deanna?
I don't. And I just want to shout out everybody this morning too. There's a ton of people saying hello this morning. So thank you so much, Harish, Vinicius, Louis, Abdullah. It's so great to see familiar faces coming back. And that means, hopefully, like Vinicius said, hopefully it means that this is valuable and people enjoy it. And we love having you here. It makes it so much fun. So really appreciate you all coming in. And I see a question about gold. So we can definitely talk about gold. I'm curious if the last conversation about ICT kind of put to rest all your questions or ideas about ICT, or if there are still things that you're wondering about ICT, because like Roberto said, I love fair value gaps, man. And a lot of people do. A lot of people, including myself, I've used ICT, what I would consider maybe not ICT concepts. This is where it gets a little controversial. So not ICT concepts, but concepts that ICT talks about. And, it's kind of like, the expression, don't throw out the baby with the bathwater. It's kind of like that, because a lot of things that ICT talks about are excellent, are really important. Like for me, one of the most important is the liquidity sweep or a flush of a certain level. That is super, super helpful and super important. And same with the fair value gap. That is really helpful because it gives you a consistent way to approach the market. So more than the power of a fair value gap, it gives you a consistent way to approach the market. And that really helps you feel better as a trader and really helps you feel like you can approach the market consistently. So again, there's good and bad with it. So I'd love to hear, if people still have questions. And yes. Okay. So do you want to talk about gold, Victor, or what would you like to talk about? Let us know in the chat. It looks like
I'm up. I'll follow your lead if you pick up anything the audience wants to talk about in terms of ICT. I will gladly talk about it. There isn't a lot to talk about, though. I don't want to be I'm positive or negative about the subject. I'm relatively neutral on it in general terms, because I haven't studied ICT, so I can't talk about it specifically, like how good it is or not. But in general, what we know is that the observations we have is from other other traders, are that a lot of ICT traders or traders who tell or say that they are following ICT traders, they can be very profitable in the market. That's a fact. That's not, that's not opinion. That's a fact. And there's the figure behind the concepts. The person itself is a subject of how would I say? A lot of people, are really not into it, not to say against, and others are, religiously believers of, the whole figure and persona behind it. But I think what you said is quite true. That's not relevant as a trader. What you want to be, if the concept works, it doesn't matter what the person behind it does or what practices or how good that person even is as a trader, right? In the end, the concept is the one that needs to convince you to use it or not. And the concept can be tested out. So you're free to test it out. And this goes not only for ICT, for actually every trading concept. It's a person delivering or explaining a concept may be a good communicator or not such a good communicator, but that doesn't change the edge or the potential edge that there is in the concept, right? So you can have someone who is very articulate and very convincing, but the concept is perhaps not as good. And you can have the opposite as well, right? Where someone may not give out the best examples, but still the concept might be very powerful. And I will not be the judge of which is the case with ICT. I'll leave that to you because I think it's a matter of opinion. But the concept, as we observe with other traders, is very profitable for a lot of traders. So I would say that's a very good sign for the concept in any case. And that's all what matters, right? You should test it out and apply it just the way you would with anything I talk about. For example, I wouldn't recommend anyone just do it because we talk about it or anyone else. Test it out, do some kind of an experiment and test 20, 50, 100 instances of that concept and see, does it hold any water? Does it have any value? If it does, then it's a good thing. Then apply it no matter where it's coming from, because it doesn't matter. You tested, you have the evidence, you have the data. It actually becomes your thing. Once you have tested, it's no longer, this person's or that person. It becomes yours, your adopted concept, and you can start molding it to your liking. And to me, that's the way to become a trader. It's taking away the good things you observe other people or maybe yourself found out that work. You may have copied the idea from another person, but you test it and you add it to your toolbox, and you build your scheme, your trade plan based on all these useful things or tools that you've picked up along the way. That's the way I know to improve your edge.
Absolutely. Let's take a look at gold. I see Roberto is itching to talk about gold, and there's some interesting things going on in gold as well. So if we can pop over there.
Yes. Would you like to start with your chart?
Yes, that sounds good. All right. So looking at gold, these lines that I drew on here are from yesterday. So just to orient you to what we're looking at here, I have the daily on the upper right. The largest chart is the hourly, and then a 15-minute down here. And Roberto said in the comment section, gold is ready to drop for me. There are so many imbalances down. So let's take a look at this here. So for me, starting on gold, I want to begin with the daily time frame. So as you know, on the daily time frame, we've had a monster run up. I mean, I can't even get it all in there without making it super tiny. It seems like gold has been on a tear forever. And then we got here, huge pullback down. It's pretty, pullback doesn't do this justice. This was pretty intense. And then a huge rally up to all-time highs. And you saw here kind of this exhaustion move where price was piercing up. Imagine what it felt like before this candle closed. You're thinking, oh my gosh, price is going to the moon. And then it just absolutely turned back down and dropped super lower, closing below yesterday or the day prior's daily high. So I pay a lot of attention on the daily chart to highs and lows. So here, when it closed below yesterday's daily high, so inside the price action of the day prior, that is quite negative for me. That would be something that I'm paying attention to. And then this was a Tuesday, big gap down into Wednesday. Price kind of consolidated and then tried again and didn't make it. So the reason I'm moving back here is so that we can use this kind of as a precedent. And gold is interesting because gold tends to move in whatever direction it's moving for a long time. So you can see it moved up forever, but then once it started to go down, it really started to like roll down the hill, so to speak. That doesn't always happen. Here was a big down day and price reversed it the next day. But look here, 3 days down in a row, huge move down, that kind of thing. We've had some consolidation here. And then last week, we saw this kind of like consolidation, like a wedge down or like a flag down. So this is the type of pattern that traders will look for that look kind of like this, where you have, let's get rid of that. A flagpole move looking thing up, kind of a consolidation down, and then, potentially a move up. So we've talked about this before. It doesn't mean this is going to happen, but it, that is kind of what it's looking like. So yesterday, price broke out of this downward trending channel. And what we're seeing is it broke out quite strong, closed above, the day prior's high for a while. I think it actually, above the prior week high. But now so far today, we're seeing a move back inside. So it popped above yesterday's daily high and moved back lower. So the momentum at this moment definitely seems to be to the downside. So then if we look over at the hourly, you can see kind of this consolidation inside that little, flag type area, a strong push higher and price is moving back down. So the question is, what is gold going to be doing here? In the short term, we're getting a pretty nice pullback here. But the momentum as of yesterday has been quite strong to the upside. So depending on your time frame, depending on how long you want to hold the trade is going to dictate, whether you are long or short gold. All right, that's what I have, Victor.
I like that. I do like that. I'll switch back to my chart because I know we have a lot of gold lovers in our chat as usual. Our community is filled with people who trade gold. We have a good question here. I'll come back to that. Roberto, no thanks to you for watching our stream. All the credits to the audience, right? So what I wanted to show is there is on the higher time frame, there is a disconnect between higher time frame, which are increasingly, not increasingly, they have been stably, I should say, constantly very bullish on gold. And we know this from, we've been saying this. Anyone, I mean, if you don't know this, you probably haven't looked at the chart of gold for a very, very long time. So that's no surprise. However, and one thing we talked about before that, we started recently creating these structures again. So we had the first bearish weekly order block that was created recently between the first one in a very, very long time. But we switched back. We started creating bullish structures again. If we go to the daily, you can see how not only that happened, but when we came back to retest it, we created another one, actually a one before that, second, and yesterday we created yet another one, a third one, meaning the weekly the monthly in any case, but the weekly and the daily are telling us that we're switching back to bullish. That's one thing. So if I see this, I want to be looking for where should I be getting in, because I want to be a buyer. However, if we look at a lower time frame, let's say on the H4, what we do see is that we broke earlier. We broke this this level, which to me was this was the on the H on the lower time frame. This was the neckline, and we broke that multiple times, making a trend that lower highs and lower lows, and we are. It seems we switched back, but we do have to confirm the break of this. We haven't confirmed the break of this downtrend yet. Yes, we are making higher highs again and higher lows, so meaning that we have started a new trend, right? A new fresh trend. Let me get another arrow, which might be a bit more, right? So what I mean is, from this point, we created a bullish order flow. We've created higher highs. A new trend has emerged, but we haven't taken out yet this high. And as long as we haven't, and let me mark this out, this trend, right? Unless breaking this low would be the continuation of that downtrend that we have, and breaking this high would be the invalidation of this trend we have. And with the trend, I mean this move, right? I'm trying to do it as precise as possible. That's the trend that I mean, right? It's a counter trend, because the higher time frame, of course, is a bullish trend. But that counter trend hasn't been broken yet, because it hasn't broken this swing high yet. So even though we do have the weekly creating bullish structure, we have the daily concurring with that weekly. So we should break it. But the fact of the matter is that if you look lower time frame, what we see is, let's say on the H4, I typically don't go to the H4 because I try to stick to the H4, H8, I mean. H4 is what I typically use, but sometimes if it doesn't give me the visuals that I want, I would then go to the H4, H8, I mean. I'm keep getting them mixed up. The H8, what it's telling us that equally, right, on the H8, this would have been the neckline. It was broken. Basically, we have a break of it's a quasi in terms of this time frame, and we have a huge area which the market is now reacting to, right? If you look at the first time it came to that area, it wasn't, we didn't see, the reaction you would want to see from that structure on that time frame, right? After the broke of the neckline. So not before, after. This is still considered part of the head complex in this time frame. This would be considered the right shoulder. So if there is a reversal coming up, it will be from this area, right? After that low point that was set in. And the first time it came to that structure, it wasn't convincing, although we had some acceleration here. It wasn't convincing reaching that area. However, look at this one now. This is an H8, right? So we're not talking about H4, which is already very powerful intraday. H8, which is, and this is the disconnect that I talk about, that I'm referring to when you consider the daily, the weekly, which looks solidly bullish, and market structure also tells us that, right? Look at that impulsive move. It has a consolidation, and it seems like it's ready to continue with these impulsive moves again. However, on the lower time frame, we see that we're getting into this H8, which is a very wide area. I understand that, but the reaction is, to me, grabs my attention. Why, when we're getting to this structure, is the H8 printing outside bars? That's a first sign that I want to see this being negated before I can say, okay, we have we can start looking for that long, or it needs to come back to some area of demand where I wouldn't care as much if price only gets to this point again, because now we have a bearish structure that's going to seal basically the upside, and that's what you don't want. You want either it to be broken before we get back to it, or you get an entry that it doesn't really matter if market only bumps into this and doesn't go any higher for some time, because you have enough area to go with. So that's something that I'm looking. I'm a little I don't say this breaks the daily and the weekly order flow, because those are higher time frames, and the hierarchy tells us that the daily and the weekly are probably going to be right. So they probably is going to break this at some point, but I want to see it. I want to, if I'm getting in here, I want to see this broken first, and then perhaps we go lower, and then we get some structure here that we can continue. That's my idea. If I want to get something, if I want to get in long, or just wait for some structure below us, and we do see that low that created in H8 as well. Perhaps that's going to be a great area to trade from. So that's my take. It's not a complete breakdown, but that's my take on gold. There is higher time frame. I'm switching back to that bullish order flow. I think it's going to continue, but I don't like the fact that we printed this candlestick combination right there. To me, that might be a little fishy. So maybe the news coming up in an hour and 35 minutes will change that. We have some another outside bar bullish, and then my concern will be wiped off the table, and it's no longer something to hold us back. But until then, I want to be worried. I want to make sure that this is not a red flag for this session, maybe tomorrow, maybe even the next couple of sessions coming up. That's on gold. Let's check. Arun says 8 hour is kind of an inverted head and shoulder. Soon it will be rocket. Let's look at that. Inverse head and shoulder.
And I think that comment highlights the idea that price can be doing two things, right? It can be setting up for a move higher while also moving lower. And that's what makes trading so complicated, and why it's really important to either pick your lane or get to the point of comfort with both aspects, a shorter term strategy and a longer term strategy. So if I had to make a trade in gold, I would want to be short for the short term, with the idea that at some point the move is going to be higher. Now, who knows if that's correct or not? It could definitely be incorrect, but the point I'm trying to make is it can be both, right? That's why trading's tricky.
Yes, actually, I'm putting it graphically what you're saying, Deanna, where you can have both set up, both direction, building their case, and you don't know in advance. Obviously, you don't know. We don't know the future, and there are many ways to do this. You could just pick one because you have one that has more confluences to do. Maybe you have a higher time frame bias. But what I do is I trade both of them. So what I want to point out here is we have this is a quasi, a bearish quasi, left shoulder, the head, the neckline, it breaks it, and you're waiting for price to come back to perhaps some structure it left behind for possibly doing this, right? You wait for price to come back and to target perhaps one of these lows. You put your stop either above that high or perhaps above the whole structure. That's one idea. But the same is true at the same time that you could also have an inverse head and shoulder, or a quasi in this case, where you have the left shoulder, the head, the break of the neckline, and it comes back, and perhaps it already triggered. In this case, it already triggered. So let me put it a better indication where it just broke the neckline, and you're waiting for perhaps a structure to be retested here for a possible entry long as well. At the same time, that happens all the time. The market is constantly reversing, especially as how gold is now looking. We are basically going sideways. If you look at the higher time frames, we are, we've entered. It only started, but we're not in that upward impulsive phase anymore. It seems to me that we are going sideways where we're consolidated for some time, and that's exactly when you have those consolidations, you will see these structures. Let me see if I can, where did I have it, on both sides, where you have structures on the right, that when price comes back, as well as the longs that you would be taking from the other structure, and both of them are present at the same time, and that makes it I would say a little bit more difficult to trade, but you just have to get accustomed to it, because this is very, very normal where you have opposing structures at the same time.
Yeah. And I love Martin's comment. It all comes down to probabilities anyway. So you can have the best ideas in the world, and it depends on, are the probabilities in your favor, so that over time, over 30 trades, 100 trades, 500 trades, you have an edge in the market. And that only happens if you can understand the probabilities. So something like, for example, a liquidity sweep or a flush or something like that can improve your odds of, it can improve your probabilities when you're in a trade. And right now, the fact, at least to me, that that gold took out yesterday's high and has reversed strongly lower from there is quite bearish to the downside. And at the same time as that's happening, but again, that doesn't mean that gold is going to be bearish long term. It just means right now it's a pretty strong move to the downside. At the same time that is happening, we're seeing the indices are really starting to pop and push higher. So we do have a major news event at 10 a.m., a high impact news event at 10 a.m. coming up, which is JOLTS. So do you want to take a look at the S&P?
Sure, let's do that. I'm gonna put your screen so you can show the audience exactly that.
All right, so this is the S&P. Again, the daily is on the right. Big screen is the hourly, and then the 15-minute on the lower right. Let's see here. So a bit of a consolidation last week. Price action was very difficult to read, very difficult to make money, for me anyway, in this mess of a market. So we have these couple indecision bars, and now price is pushing higher. So looking at the hourly time frame, we had this area of chop where price was kind of consolidating. Oops, it's actually here. Moved it the wrong direction. Overnight, it was kind of stuck in this area since Thursday, kind of back and forth, taking out either edge and then moving, but having a hard time breaking out. And then yesterday, pretty decisively broke up out of that range, pushed higher, and then pulled back for me, what is overnight. So this is the London session, and now we're starting to see a push higher again. JOLTS is coming, though, in an hour and a half. So we have this major event that, I want to be aware of and pay attention to as I'm deciding on my trade. But right now you can see on the 15-minute, a really strong push higher. We're starting to come up into some important levels overhead. You can see the daily, this is the daily previous day high is marked out, and it looks like price might be marching up that direction. But again, keeping in mind that JOLTS is coming in just an hour and a half, and the open in an hour.
Perfect. There is one. That's awesome. We have 1 hour. You said market open. The JOLTS is coming in an hour and a half. So there's. Would you say this is a moment to be looking for setups, Deanna, or would you say it's better to wait for the news to come out first?
So price is fairly extended here. You can see we've had this large move up, and often it can be really helpful to look for for example, a 15-minute swing low that gets taken out. So here is a good, here is a good example of where that happens. So if you're familiar with the concept of a liquidity sweep, that's what ICT calls it. A flush would be another name. Let me know in the chat if I'm missing other names as well. But something like this here, actually, here's a better example where price was kind of slowly consolidating upward. And then we had this huge monster move down, and price clearly took all this liquidity that had lined up here. So all these stops that had lined up here, price took those stops and then pushed strongly lower. Okay. What we're seeing here, though, we have all these kind of this like move higher, but we really don't have a whole lot of swing lows. Here, I'll put that on there so we can see them marked out automatically. Swing low, it's a little hard to see with the color, but here is a swing low that was swept beautifully and then pushed higher from there. So that was yesterday, right at the, near the close, 4:15. And then we really haven't had, here's a swing low, 15-minute swing low. If I adjust this, let's move this down. Okay, so here was another one, and here was another one. And these swing lows have not been swept yet. So, price is just in a tough situation probabilistically to get in long. It's probably in our best bet to wait and see what happens leading up to the 9:30 open, and then definitely jolts as well. I'm not really seeing a high probability scenario where it would make sense to get in long anyway. And I don't really see any reason why I would want to get in short here. I don't want to bet against the indices when they're moving up with such strength. And I don't really see any reason for me that I would want to bet against this move. So I think I would wait personally.
Yes, that's sound advice. Although it depends, of course, on your strategy, on what the holding duration is. If you're a scalper, I mean, an hour and a half is I wouldn't say an eternity, but it can be plenty of time to get in and out of the market multiple times. So it depends on the, what are you trying to catch from the market? In my case, I'm trying to catch the whole move, not the whole move, but I'm trying to catch part of the move of the day. And that's not either it happens before the news or it will happen with the news. So getting in before the news is a little bit risky because you have that big X factor. What will the news do? That will affect the rest of the day. So in my case, for my main strategy, getting in right before the news is something I need to be cautious on. Although a signal is a signal, and I would still be considering it as long as I have enough margin for error, right? The current, I get in, let's say, an hour before the news, and if the market is still there by the time the news comes out, I probably have to close it because it will be too close to my stop loss. And I don't want to have that higher volatility coming in while my stop is easy picking for those spikes, those volatility spikes. Before we continue, we have a little clip we want to show you guys about our competition going on, and we'll be right back.
Listen up, traders, we got a new competition with massive prizes launching at The5ers. The top traders, they will win high stakes accounts, and everyone in the top 100 will get a prize, including hub credits and bootcamp accounts. And we're actually doing this every single Wednesday, week after week, so you will always have a chance to win. It's fast, it's free, and it's easy. All you have to do is you sign into the The5ers Hub, click on the contest on the left menu, and join the upcoming competition. We hope to see you all there. Good luck.
That is Jonatan explaining about the competition. There's the next competition starting tomorrow, so you still have chance to participate. It's free to participate, and there are prizes to be won. And it's also an opportunity to test, even stress test your strategy, your emotions, your greed, management of your greed, and everything else. So grab your chance at the competition. I'll see you. Tell us what you've been what kind of results you've been getting on these competition, maybe in a week's time. If you enter today, let us know in the chat in a week from now how your competition results have been so far. All right, there's one thing that I want to talk about. We were talking about gold and about the inverse head and shoulder. The user, the viewer asks us, and Azras is saying, "Bon dia, Pedro." Well, bon dia to you too. Let's see. We have
you made that joke at the beginning, so he's not wrong. That's how you introduced yourself.
I know. I said I'm Pedro, and of course I'm Victor. I'm just making that joke, just trying to tease everyone, thinking one thing while it isn't the case, because of course it was earlier on. Jonatan was calling me Pedro for a couple of times, and that's where the joke started. But there's something here. We do have a couple of questions, but before we continue, there is this one I wanted to talk about, which is the inverted head and shoulder. Arun Chandran was referring to, and I want to ask you this, Arun. I'm gonna go to the H4 or H8 and ask you which inverse head and shoulder are you talking about? As you can see, I marked them. I see a head and shoulder, an inverse head and shoulder in this area, denoted with the small capital letter, small case letter A, and we have a bigger place where you also can see a possible, perhaps that is the case, right? That would be the head, the left shoulder, and perhaps this is already your right shoulder, or it might be coming still. It will still have will be coming up, depending on your rules on your head and shoulder. Or are you referring to this one as the head, the left shoulder, and this a possible right shoulder, and you're waiting for that break and the continuation? Let me know in the chat which of the two is it, A or B. I'll be looking at the chart or the chat to see if you're still with us, because last one. Okay, so last one would be the A. Okay, I understand that. Let's take a look at that, and I'll tell you what my ideas are. Now, you mentioned an inverse head and shoulder, and I like that you specify that, because there's a couple of things, right? A head and shoulder, where do you put the distinction, or how you define a head and shoulder? We all know the let me point it out here, right? We all know the structure, a head and shoulder, where you have basically, you're looking for this kind of, not identical, not symmetrical, perfectly symmetrical, but you're looking for this kind of move in the market, and the inverse is the opposite of that, or the mirror image of the same, right? So you're looking for something like this, and perhaps the hat should be in the middle, just for making it as nice as possible. The thing is, from theory to practice, you're not gonna see the perfect structures we see on textbook or on web pages or wherever you learned this. You need to have some rules, right? So how do you define? And I'm not gonna go into the details, because we could speak about an hour still, and I wouldn't even be done how to break down to define your own definitions of your head and shoulder, and what is and what isn't. But what defines a swing low? Is this if I look at this, not a swing low, I meant a left shoulder, right? Because that would be the left shoulder, the head, and the right shoulder. How do you define the left shoulder to begin with? The head is easy. The head is the lowest point in an impossible inverse, right? So what I'm saying is this a head and shoulder or not? Inverse one. The head is very easy. That's the lowest point, right? Very easy. But is this a valid left shoulder or not? Now, you can not define it objectively and just say, if it looks to me as a inverse head and shoulder, I'm going to consider it one, and that's fine, and that would be discretionary. The only thing that I have with that, that approaches that it's very difficult to build data on, right? Because where's the line? What if this is something like this? Do you still consider it a head and shoulder? You might say, yes, I do, because there's still that swing low. What if it's like this? Do you still consider that? You know where I'm going? It's to me, the proper way, without stepping on anyone's toes, the proper way of approaching this is having, strict rules. What is a left shoulder? And what are the describe what is a valid left shoulder or not. The reason that I talk about this is because not in terms of head and shoulder, but in terms of quasi, I wouldn't consider this to be a left shoulder. And I'm not saying it's not. I'm just saying I'm not considering it. So, but I do see the same thing that you're seeing, which meaning we have 3 swing lows, and the center one is deeper than the other 2 on each side, which could be your definition of there's nothing wrong about that. Your definition of the how you define your head and shoulder. And if that's the case, then by all means use it, as long as you have the data and you have the experience, or you're still building it, and it's all right by me. However, personally, I want to see the left shoulder have a significant move, and I miss that in this case, right? I know this is a bit more like a advanced head and shoulder theory, and at some point I will be doing a course on ABL on quasi, which you can still apply on head and shoulder. I want to see the left shoulder tell me it hit something important, right? So I want to see in the candles that create that swing low, I want to see momentum, and I don't see that in this case, right? So because of that, and the reason that I use this criteria is that in my data, and this may not apply to everyone, your data may not need a selective left shoulder. In my case, I saw that the left shoulder is a good predictor of the structure, right? There are characteristics by how the left shoulder is created that will define whether that will affect the probabilities of the structure, the whole structure, right? So it's a very interesting question, and too pity we can't go too deep into this right now, because otherwise it'll become a lesson of 90 minutes or so. But so cautiously, I would say this, it is a head and shoulder, an inverse one, but it's not one that I want to use personally. Okay, so but great question. Keep those coming up. There's one other question that I saw in here that I think is where was it? I think it was this one. Victor, what was the indicator you had for Quasimodo? I don't think I have any. Maybe correct me if I'm wrong, but I don't have any indicators for Quasimodos. Maybe you're referring to something else. The Quasimodo is formed with the candles, not any indicators. But let me know, Ninev. Nice, beautiful name, by the way. So what else do we have? Vinicius, yes, indeed. This message has been posted a number of times. Be aware, Famous, if you don't want to be banned from our chat, post your message just once, right? We need to keep the chat clean as clean as possible, right? Okay, perfect. So
you might want to get rid of both of them. That's a spam chat. That's not real. They're advertising somebody. That's just like on YouTube. You see that all the time.
Actually, I didn't actually. Yeah, actually, I didn't read the. Didn't read the content. So there we go. That's gone. Thank you, Vinicius, for that message. Are there any other we need to clean up?
Can we pop over to gold again? I see. Sure. I see a comment about gold. Ali is asking, about gold again, and gold is looking interesting. And so we talked about how price came above yesterday's high and then dropped below it. You can see that here. And we've got now an interesting situation that not only did gold, what we were talking about, whether you call it a stop hunt, liquidity grab, a flush, gold flushed these lows really nicely and recovered from them. So this is the 15-minute chart. We had a whole series of lows lined up. Price really, kind of dove hard below here, came and bounced off that. And so that's on the 15-minute chart. We can see the same thing if we're looking at the hourly, and the hourly, of course, is an even higher time frame where we also have a really nice move. So we have a swing low here, we have a swing low here, and price came down and pushed higher. And one thing that I was noticing as this was happening, this large pullback was happening, is that the ADX, that's a tool that I use to determine the directional strength. The ADX was fairly low, and now as we're starting to kind of like round that bottom potentially, ADX is starting to pick up again. So for me, I'm looking at the 20 range chart and the 40 range chart. It is above my 20 threshold, so it's 29 on the 20 range and it's 18 on the 40 range. So I am interested in looking at a potential long in gold, but I want to see that ADX move up a little bit more. So I'm not worried about being late in this trade, because potentially it could be a fairly outsized risk to reward potentially. But I do want to see the ADX kind of confirm that there is strength behind this move. And as that's happening, in the S&P, we're kind of starting to see like a little bit of weakness here. So again, the next 40 minutes for the New York Open, and then an hour 10 for the Jolts is probably going to be pretty impactful and pretty meaningful.
Awesome. Like that. Yes, talking about gold, for those who are interested, Ali, what I can tell you is that I expressed my concern about the H8 showing this candlestick combination. It means that gold hit something significant to create an H8 outside bar. Doesn't mean this is the end of the bullishness. By no means that is the case. But if I see this, I want to make sure that this is negated or softened with, it doesn't have follow through if I want to be going long. If you go to the H2, you can see that we're currently reacting bullishly on that H2 order block. That that's another argument to think, okay, we're coming back to what we're expecting, what we should be expecting, which is bullish order flow. And if we look a little bit, what I want to see is, now that we created this, you can see how it left a fresh order block on the H2, which is this H8 is also visible on the H4. I want to see how market reacts when we get back to this structure, right? To that H2, H8 and H4. When we get back, I want to see what I don't want to see. I don't want to see reversal patterns being created. If that were to happen, that would be a second thing that concerns me. Not only it creates that higher time frame H8 structure telling us that it hit some significant supply area, but it's actually also reversing from it. So if you see this on the 30-minute, on the 15-minute, or I don't think you'll see it on the 1 hour, I would be cautious with that long. That's why I mentioned I would rather price go much lower, we get it long, and then I can partial out as we get to this area, because I have already identified it as a supply zone. And if it breaks through the partial that is still, the portion that is still open, I will continue with it. But here you're too close to being not getting the clear signal yet convincingly, because you have both of those at the same time. So I would be a little bit cautious, and I would want to see price to be, what I want to see price is increasingly creating bullish structure as on the lower time frames, right? As it is doing this. So I want to see here, let's say on the 30 minutes or the 50-minute, a bullish order block. It comes back and retests this, and it keeps on building that. Maybe not on every swing, but with some regularity. If you see this mitigation of mitigation of these structures, these order blocks that are being created, then I can be more confident that whatever it hit here is no longer present, right? Whatever supply area that it hit is not going to come back to the market and push price much lower. It's just a concern. It doesn't mean, it's going to do one thing or the other. It's just something I want to be watchful of in gold, especially because we had such a nice run. It's not uncommon for gold to have a deeper retrace, which is, gold is very volatile. News comes in and it may change the sentiment for a couple of hours, and you see gold much lower. You didn't expect it to happen. And, so that's one thing that I wanted to share in terms of price action. Awesome. And we're getting close to the turn of the hour. What do you want to look at, Deanna? There's something we want to be looking at specifically?
There are a lot of great comments in the chat, I'm noticing. I'm just reading through them as we go through, and really great comments. So I'm not sure how to say this name, Ninev. You're asking, are you making those marks? Are you making them? Let us know what marks you're talking about. I don't know if it's the swing low maybe. But yeah, I'm seeing a lot of great chat comments here.
How long ago was this comment? I'm trying to find it.
Let us know if you're still here so we can answer your question. Yeah, 8-4. Oh, you know what? That's my time. So maybe
just a minute. Just a minute. I can find it.
49.
49. Okay. Let me look it up. I don't have that one.
You don't?
Yeah, this one. Okay. Those marks, you made them. I'm not sure exactly. I don't know what Ninev, what you're referring to. But all these markings on my chart, obviously, I made them. And if you're talking about the definitions that I use on the quasi, it's somewhat arbitrary in the sense that I choose my own definitions. It's my choosing. But the thing is, I did it through data, right? I'm very data driven. So if I try to, as much as possible, every definition that I use, every selection, every filter that I use, that it is being substantiated with data, meaning that I compare, like, let's say I'm gonna make it very quick because we're running out of time. But let's say the example that I mentioned, where you have the quasi, it breaks the neckline, and I thought up, that's actually the whole process of how I built my system. Very quickly, I thought up, just by being creative, how should I define the left shoulder? And I didn't know at the beginning, right? This was some time ago, before I started, while I was creating my system. I started thinking, okay, what if I define it by this definition, A, right? And you fill in how that could be, and then B and C, and I categorized my data. Is A good definition by looking at how often the does it make any difference to begin with, right? If A is the way I define them, and the ones that are not A, so I compare those that they fit the definition and those that don't fit, but they still look like a inverse head and shoulder, or quasi in my case. And I keep comparing them, and the one that is the best predictor of a good pattern, that's the definition that I chose. So although it's arbitrary, it's my choice. It's backed by my data. And the tricky thing is that for your strategy, your definition might need to be slightly different, because the definition is based on my entries, my stops, and my targets, my win rate, my holding duration, so everything about my system. So it's not a universal truth that you need to apply the same definition. Although I would argue you probably, your definition is probably going to be very close by, because what I'm measuring my data, if that is a predictor of the success rate of these reversal pattern, then they're likely be useful for everyone else trading the same pattern. So I don't know the question exactly what it was referring to, but that's the idea behind building these quasi strategy. I don't know if everyone likes to talk about this, but I could talk about hours on this. It's it's to me it's not boring at all. It's very exciting. All right, so okay, so I suppose okay, so now I see Nina asking, or I asked about the indicator of quasi that Victor had on his chart, but it seems like you made those. You mean this indicator below? Nina, I think you probably are referring to this indicator below. This is the ATR, and it tells you something about the range of the candles. In this case, it's the 4-hour range. So currently we the average range of those candles is 19.75. That depends on the asset. In this case, it's $19.75 on gold, and that is the average range of these candles. It is not something that I use for the quasi. It's more for my targets, to look for. You could use them for stops as well, but so it's not something specific to the quasi. You don't need the ATR for the quasi. All right, so Louise, as usual, Jose Trades has a inverse, says there is an inverse head and shoulder on the gold 1 hour. Let's take a look at that.
I'm going to hop off, get ready for the New York Open. It was great to see you, Victor. Thank you, Vinicius, for the feedback. And it was so great having everyone in the chat today. And I will look forward to seeing you all next week.
Deanna, it's a pleasure as always. Thank you. Have a great day and lots of profits.
Thank you. Take care, everyone.
Listen up, traders. We got a new competition with massive prizes launching at the 5ers. The top traders, they will win high stakes accounts, and everyone in the top 100 will get a prize, including hub credits and bootcamp accounts. And we're actually doing this every single Wednesday, week after week, so you will always have a chance to win. It's fast, it's free, and it's easy. All you have to do is you sign into the 5ers Hub, click on the contest on the left menu, and join the upcoming competition. We hope to see you all there. Good luck.
And it is the hour with Ashley, the man himself, the man of data, automated systems, profits, and a vast knowledge base to share with our viewers. How have you been, Ashley?
I'm good, and yourself, Victor. Thank you for the glorious, kind introduction, and hello to you and all the 5ers viewers. You're doing a great job. You guys always do a great job day in, day out, every week.
Thank you. You're kind. Thank you for your kind words. We have people saying thanks to Deanna, and that's for a reason. Deanna is great with her analysis and her insightful psychological insights. Especially, she's a psychologist. That's why a Dr. Cole, Deanna, is a great add to our team. Surely is. All right, so there's one thing we were, just before we had that little intro for that little clip from the competition, I wanted to, we were discussing the 1 hour inverse. We had Jose. Let's see where Jose is. And we were just about doing that. And Jose, you're absolutely right. The quasi, well, I say quasi is a version of a head and shoulder. I typically talk about only quasis, but when I say quasi, that's a form of head and shoulder. So you're absolutely right. To me, this on the H1 is a inverse quasi as well. That's the head, the left shoulder. And to Ninef, to your point, what constitutes a left shoulder, right? Coming back to that definition, you can see that there are, there's the impulsive move into that area, slowing down, and you can see a little impulse. And if that's not enough for your criteria, you have another push. And even if that's not enough, you actually have a very nice push here, which really tells you that there are buyers here, and that's what you want to be seeing on the left shoulder. So to me, this is the level. That's actually there could be a level here as well, but this is obviously the clear level where the neckline lies, and it breaks it. And that is, go back. This is the way I trade these quasi NINEV. I go back and look for structures that price will come back to. And lo and behold, voila. There we go. Right? It doesn't always happen this beautifully, but it does happen often enough in the market. Not only that, even if it doesn't happen very frequently, imagine what you can do if you knew in advance with certain degree of probability that the market is likely to reverse from these areas. Look at how tight this is. This is only, how much this is, like $4. If you can get in on a possible move, with a $4 or make it 6 or 8 risk, and you're looking at moves that are, in this case, it was a very nice move, but you would be targeting the top to begin with. That's 58, right? Possible movement with only 4, 6, or 8 risk. Obviously, this is a huge, and this is exactly why I trade the quasi. So if you want NINEV, if you want to learn more about quasi, just stick around, and if you see me, you're gonna hear quasi in not a long time afterwards. Ashley, coming back to you. So how is it? How are your EAs, your bots, your robots? How are they doing today?
They're doing well. They keep on trading, and that's the beauty about it, the core strategy. So that's great, and then it moves along, and then I just go along with the ride of the market, and then allow the trading and the data to actually come through. Hello, everybody from the viewers, Venetius and Louis. Thank you very much. Thank you for the welcome. 100%.
Exactly. What is are you? This is a question I didn't think of before. It's on the fly, Ashley. Do you recommend? Do you recommend traders? Look for automated race, or do you think that's something that needs to grow organically from the process? What do you think? Do you think you need to be a trader, a manual trader first, and then automate your manual trades, or should someone go straight to automated systems as they become traders?
It's a very good question, Victor, and it's quite uncanny on how you ask, because one of my suggestions for today, I kept it quite relaxed for today, and I always take always your lead, but I was going to suggest in terms of discussing with the viewers just some insight for them to start thinking about planning forward. So I'm going to answer that question in a moment, but if I may add some insight to the discussion you've had just be with Deanna and the viewers about the head and shoulders, something if I might add some insight to the head and shoulders, the inverse head and shoulders, just some areas and tidbits, is that just one thing that I've noticed with traders as they get into price chart patterns is, don't forget the head and shoulders is a reversal pattern. So you are looking for, number one, a trend. Number two, just another little tidbit and insight. You can any chart pattern, you can always go back to Charles Dow and its Dow theory. So meaning for an inverse head and shoulders, basically you have a falling trend that is now going to reverse into a rising trend. The left shoulder is going to be basically made with a lower high. The head with a lower low, that indicates that trend, that falling trend is in place, is intact. Then if you go up to the right shoulder, then you're going to see a very similar high. So it's not going to make a lower high. It's going to probably make a similar high or slightly higher high. Then as it comes down, it makes a higher low. And that change of Dow theory from lower highs, lower lows to higher highs, higher lows, that indicates that trend reversal. So just remember, when you are trying to identify chart patterns, understand, is it a reversal pattern or continuation pattern? Very often you'll find that you can identify a head and shoulders pattern, but actually you can identify a inverse head and shoulders patterns, but it's actually a rising trend. What's preceding is a rising trend. It's still a inverse head and shoulders. The pattern is still there, but you can't really say it's an inverse head and shoulders because it's not reversing. Inverse head and shoulders reverses from falling to rising, and a head and shoulders from rising to falling. So just some little bit of insights there. And exactly what Victor's doing right now and illustrating. Thank you very much, Victor. So I thought I'd just add that insight when you were talking about the definition.
Yes, this is very. I think everyone has seen the head and shoulder patterns. Well, I assume everyone has watched them. If you've been a trader for some time, you probably stumbled upon it on YouTube. If not, then on some. Maybe a long time ago from some actual textbooks, but this pattern is so popular. Who hasn't, heard about this or saw this? But it's very important, even though it's a classical pattern. It's something that's been with us for as long as trading has been a thing. You need to make it your own. You need to know your definitions. What is how much of a trend? What the first thing actually what you said Ashley is because it's a reversal, you actually have to have a trend that before you can reverse that trend. So
correct.
That the first thing is then you got to define what a trend is to you, right? If I ask 10 traders what a trend is, they might come up with different definition, and I don't say each one of them is wrong. There might be some wrong answers between them, but probably all of them have some kind of truth to them. But that's even though you can say, well, one definition is better than the other one, and that could be a thing of a debate or opinion. The important is that you have to have a definition of your trend and have it as objective as possible. How do you define? And I'll give you 10 examples and ask you, is this a trend? Is this a trend? And you shouldn't doubt about it if you have a definition, because you just apply your definition. It should be as clear as, the day's sky. Is this night or day? It's not something maybe a trend. It's a weak trend. No, is it or is it not a trend? And the only way to do that, to be as confident as that, is by having a clear definition. What constitutes a trend for you? It's a very simple question. Everyone talks about trend. But what is your definition? And that's where you start. If you haven't defined what a trend is, how are you going to look for a quasi or a head and shoulder, right? You just start with the first thing. You got to have a trend, and I say established a trend, right? So the first step is have an established trend, and then you look for that possible reversal of that trend. The whole thing is with the neckline, for example, in the case of the quasi, what is a valid? Where do you put that neckline? Right, it changes everything. Right, if you have the neckline all the way up here, you can obviously understand. For those who are watching, imagine you have this. Is this it looks like a head and shoulder, or is this a valid pattern? I'll just say pattern because either quasi or head and shoulder, they have a lot of overlap. They're basically quasi is a form of a head and shoulder. Is this a valid pattern or not? Right? How do you define the validity? You got to have definitions for everything, in my opinion. Even where do I put this line, that neckline that needs to be broken, that indicates a break of structure or a possible change in direction of the trend. And sometimes, what if there's something in there that will allow you to put it lower? Then this would be valid, and this not, at least not yet. So it's very important to have these things clear before you can. And if you can't define your patterns, then you can't measure the results. Because how do you know which one is one if you can't define it, right? If you don't know what a zebra is, how are you going to count how many zebras there are? if you don't even define what a zebra is. You gotta define it in order to say, okay, this is a zebra, and the other one is just a horse. All right, so let's get back to the market. So get these questions coming in. You have Ashley. We have Ashley to our disposal, at our disposal today, sharing his his knowledge, his insights, and everything in between. But coming back to the question,
yes,
say about automated trading. Is it because I think you mentioned you were a manual trader before, and now you have switched to as I understand, I think completely automated now after many years in the market, right?
Yes, that is correct, Victor. However, just to clarify, I'm a firm believer that everything has its place. So to give you my background, when you say a manual trader, there's different degrees of manual. And I think I've experienced plenty of the different areas into automation. So meaning manual, such as manual actually physically phoning the broker. You actually didn't have a platform where you could put a stop loss or a take profit. Your stop loss or take profit was you phoning, being disciplined and understanding the process to phone in the broker and close that trade. Where's the current bids and offers? What's the depth? Closing the trade manually yourself. Saying to that broker, get me out, kill the trade, execute, close it out at the bid, at the offer, etc. All the way to hand trading, which most individuals are doing now on a platform, and then into an EA. Automated. However, to answer your question, Victor, certainly yes. I firmly believe in the journey of any trader, it is important to have an element of automation. And there's an underlying reason why, and it's a bit more detailed, which we can get into. And that detail is, if we take it from a very simple, practical point of view, one of the key objectives, I'm sure everybody would be able to agree with me, for this skill is to get to some type of financial independence or financial freedom along your journey at a point in time. Now, one also has to think about it. In your journey, there's a lot of things you have to do, and the one thing you have to do is manual trading, hand trading, however it may be in your journey. However, at a point in time, how do you get that financial independence if you need to be glued to the screen all the time? Now, again, everything has its time and place. And I think it's important as a trader, very much like a CEO, where the vision of that business organization, that company, he looks at that vision. Where is that business going forward? So if you have that mindset in trading, how are you going forward? Not just the day-to-day analysis, risk management, what's happening in economic news, where's the next trade, handling emotions. That's just like the day-to-day operations. It's understanding, how do you take your trading forward? What are you working towards to really practically reach your goal? And that means financial independence, that things are happening in the background while you can then dedicate time to either family or other interests and buy back your time. Very similar. And again, congratulations to Mike. Sorry, not Mike. I forgot the other. I forgot his name.
Griff. Griff, you mean?
The newborn.
Griff.
I overheard
Griff.
earlier.
Griff.
That's a
yes.
Griff. Congratulations to Griff on his newborn child. So it's very similar to that. They were discussing that balance of getting the actual balance between working and spending time with family. So I think it's important as a trader to always think forward, meaning whatever I'm doing now, how is that going to play out in my next 5 steps? Always have that foresight. So definitely automated trading has its place, but that does not mean hand trading literally dies. I still do hand trading to a small degree compared to my past, but it still exists in my trading regiment for different strategies, etc. It's just not as intense as I used to. So everything has its place. It's just understanding where you are in your journey, where to place it, and what to work towards. And everything has a good and a bad. And it's understanding how to combine that together to achieve that balance.
Awesome. So you say every phase of a trader, there is a place, not in every phase, but in every trader, there is a place for manual trading and automation, especially if you look long term. You want to have optimization of your time. Basically, that's what automation is. So would you say it's necessary for a trader to learn hand trading or manual trading before they venture into automated? Is it a requirement to become successfully a successful trader with automated system?
I wouldn't say it's a requirement, but I would highly, highly, highly recommend it for the pure practical reason of as basic as if you take those business organizations where a CEO really understands the day-to-day operations, he's more in tune with what's happening. Because remember, at the end of the day, you are steering the ship. To a large extent, trading is a one-man show. You've got to oversee a number of areas, and you can then delegate work to your workers by your EAs, but you've got to understand the trading itself. You can't go in now and say, well, it's the EA's problem. No, you're the one in charge. You're the one responsible. So certainly it's not a requirement. You can just get into automated straight out, but whether you'd be really sustainable and responsible, ? My suggestion is always go understanding the manual route, and then you understand what type of automation or what degree of automation you want to work towards in your journey. And again, it's doesn't mean you have to, but it's something to bear in mind relative to the main objective of achieving that financial freedom and independence.
Yeah, I like that. I like that a lot, because we a lot of traders we have that risk of losing sight of what we're doing it for, right? In the end, it's just a means to an end. Trading is. It can be the ultimate goal, as it is a passion for a lot of people, including myself. But in other aspects, it's just a mean to an end. You want to do it as efficient as possible with your time, because there's more to life than only trading, right? It's very important to, as a trader, I sleep, eat, breathe trading all the time, but still that's not everything. There's a lot more to it, so to life, than just trading. And in that respect, automation, what I see as automation, where it helps it, because I'm a strong believer of systematic trading. Whether that's automated or manual is beside the point. But I'm a very, very strong proponent of systematic trading, meaning that you actually have a system. I always talk about this, a trade plan. That's another word for a system. What do you do next, right? And what do you have to see in the market, on the chart, on the indicator, or whatever you're using, to make your next step. And until then, you don't do anything, right? That's a system, which tells you it's an algorithm, right? Algorithm doesn't have to be automated. That's another word for a system, algorithm, right? It is a certain plan that you're following that tells you which conditions need to be there for you to take the next plan, next step. And I'm a very strong proponent of that, which is an abstract to a more discretionary trader, which is less systematic, still uses a certain thing, has a certain number of things that he always uses the same thing, but he juggles with them. He's much more free to enter, because there's something that convinces, even if he can't pinpoint it, doesn't have a clear definition, he just have seen this so many times, he has a feeling, a gut feeling, and relying on his experience, he knows that this is likely a highly high probable trade. Instead of that, I rely more on the system, because the system, you can, yes, discretionary, you can build data as well, but there's nothing more precise than when you're collecting data on a system, because if you have good rules, good definition, as we talked about, you have a higher certainty that the collected data is relevant and is precise, measuring what you're trying to measure. Because when you're collecting data, you're actually doing the same thing as an experiment in a laboratory, right? You're controlling for different environment, conditions, variables, and you're measuring one, sometimes more than one, but hopefully just one variable. And you're trying to see, okay, if I change this, what is the effect on the end result, right? And how do you get the best lab results is that you control for every other variables. And the only way to do that is in a systematic way, having a system to do that. And obviously Ashley knows all about this, because automated systems are all algorithmic. They're, by definition, they have a system built into them. There's no discretion. The robot isn't, making any decisions. It's just executing the plan that you already put into that. That's the definition of a robot. It's not really thinking. It's just executing the plan. So, so you say it's there is a good there is you say it's to become a good trader, a successful trader, even a successful automated trader. You need to understand the underlying systems and the reasons why this indicator would work and what conditions they would work in, right? And the only way to understand these, or to have this understanding, is by actually being a manual trader, actually be in the market and executing for some time to understand what these tools are and how to use them. Is that correct?
Correct. And to put it in the right perspective, I would definitely recommend that to be a sustainable and responsible trader. And those are the key words, because if you can be a sustainable, responsible trader, by default, you can be profitable. The key is that with internet and technologies these days, one can even purchase robots, EAs. But at the end of the day, you are accountable. You are the trader. You are at the head. You are the CEO. The accountability stops with you. The buck stops with you. You need to be responsible. Fortunately, this skill, there's a lot of glory to it, and about that profit and that glory, but very little gets focused on actually what it goes into be responsible. If you can be responsible, sustainable, you can be profitable. So the responsible, sustainable way is hand trade, understand the ins and outs of the market or whatever your strategy is. At the same time, have that idea of where do you want to go to, because this area also opens up many different aspects for you as a trader. And what I mean by that is that, remember, a single strategy will not be able to satisfy every single objective you want in trading or the outcome you want in trading. Allowing yourself to actually start thinking greater, not be so focused on the here and now and the exact nitty-gritty of your analysis. Broaden your horizons out. Look at different strategies to accommodate different areas. And not only that, you start to embrace the understanding of data. And that's the key thing. So a lot of areas that we've spoken about, Victor, where we've mentioned it's not the sexy thing, not the exciting thing in trading, but it's the most important. It allows that trader to have that time to refocus. So it is a journey. It does take a lot of thought, but if you don't plan, you're not going to go anywhere. So it's something for what I would highly recommend every trader think about. Where do they really want to take the skill for them? Maybe they're just happy where it is. That's perfect. But if you really want to take it to the next level, it's things you need to be thinking about now. Not necessarily actioning, but thinking about planning. And it's a slow process. Allow that process to gather momentum, etc. It doesn't mean you're going to have an EA tomorrow or the next week. But the idea is, okay, well, I need to work towards potentially looking at that. And what are the steps you need to take?
Awesome. Yes, I like that. So okay, so you say, what was the responsible and what was the other one?
Sustainable.
How does a trader know that they're responsible? I know it's a simple question, but what's responsible for one person might not be the same, and you might have something in your mind when you say responsible trader, but a new trader doesn't have any reference points yet to know what's irresponsible and what's responsible. So how would you define these two traits, responsible and sustainable characteristics of their trading?
Excellent. Thank you, Victor. Very good. So number one, responsible. The way I'm going to gauge it is based upon the following. The first thing on my mind is never profit. It's never, this trade won. I want to know all the trades I lost, how well did I manage them before any profit. For example, when it comes to the competition of the 5ers or something the presenters do, I wouldn't reference how much profit I made. I would look at the data, the profit factor, and more specifically the recovery factor before the profit factor, not amount of dollars. So your focus is always on about that loss. The profits you don't even care about because you'll know they'll actually come through. If you manage that risk, then the profits take care of themselves. So my first thought is never about profit. Never, ever, ever, ever about profit. Always about how do I manage risk? Am I doing the right things? Is all the necessary areas about my plan, about my strategy, about my exit points to manage risk always there? I never ever question about moving a stop. Always a trailing stop, always according to the strategy and the different outlines, never thinking about profit. Looking at the data before profit, recovery factor, looking at what the data is telling me. So I would say those are the key aspects about a responsible trader. When you can actually ignore or somebody says they've made a great trade and they made profit. If I made a good trade, I would say I've lost well. That's how I, in a sense, would not brag, but would show off to say I lost well. I can lose well because I know I can make. So I would say those are some of the aspects you can pick up from a responsible trader, and not necessarily saying you made X amount of dollars, but actually showing you the physical data. To be sustainable, it's about looking at all the different markets, a wide range, and irrespective of what is happening, whether it's high impact news, keep on trading, continue to keep on trading. And I think that's the key thing for me as to define those two areas. Again, I'm actually gauging according to myself because those two questions are highly subjective to the person. But I think it's characteristics like those that will say to you if a trader is responsible and sustainable.
Awesome answer, Ashley. It shows you have earned your stripes in the industry with your experience. Let's look at. We have one person asking to see BTC. Bitcoin, yes. That's one of the assets you trade, right? On your,
yep.
Is it? Yep.
Yep. Part of the 80.
Part of the 80, yes. How often does your trade, your EA trade Bitcoin?
Oh, very, very often. On average, okay. I think out of those 18 symbols with the with one of the strategies, again, I'm deploying a multiple strategy across multiple 5ers programs, but just to give you like an average, one of them trades at least takes 4 group trades per day for BTC. At the moment, I've got no open trade on BTC, but I do have an open trade long on Ethereum.
Okay. Awesome. So you don't have anything open for BTC. All right, let's look at the. I'm gonna do a quick breakdown for Sanju. Thank you for watching, Sanju. We really appreciate it. So we have here is on the higher time frames, just to start with a proper perspective, and only even if you didn't even look at the chart. If you just heard, people talking on the streets, that crypto has been very, very popular, becoming very popular, and been taken more seriously through the years. And this shows in the graph. It's becoming a matured asset class or asset in itself, crypto asset class, and that's exactly what we see here, right? We have huge growth potential, huge moves. And it's very bullish. We haven't had any. We kept on breaking all these highs from before. Currently, on the weekly time frame, on the monthly. No, this is the weekly. Let's go to the monthly. We last month we made a all-time new high. Right. That tells you that the market is still hasn't still is in that mode, right? If you're recently making all-time high, what does that tell you, Ashley? From you talk about the 52-week high being taken out. What does that tell you when there's a 52-week high being taken out? What does that tell you tell about the asset, about what it's likely to be doing next?
If it makes a new 52-week high, and specifically the number of 52-week highs, but just the 52-week high itself right now indicates there's much more momentum in terms of that rising trend. So there's a fair degree of probability that rising trend is going to continue. However, no guarantees, but now you then be aware of it, and then you can then position your strategies accordingly. Not saying that though, there's no harm in either going long or even short. So you can take trades with the trend and counter trend, just understanding that the trend is certainly rising. And because that 52-week high, it does have that momentum and that herd mentality to actually follow through for making further 52-week highs. And another thing is that if we have a look at BTC USD for the last, let's say it's a year to date, but if we actually take it the last couple of months, this is, if I'm not mistaken, the second 52-week high it's made for the start of this year. So the fact that we've made a second 52-week high for 2025 indicates potentially that there's potentially more to come. How much more, we don't know. But again, some insight, I think it was in 2021, I could be mistaken with the year, or 2022, where the US indices, S&P, NASDAQ, and the Dow Jones made 62 52-week highs in that year.
Awesome. And we know that Bitcoin can be very trendy, very volatile, but also very trendy, meaning it keeps the trend the same direction for a very long time. You just have to look at the market. You can see how it keeps on going. And this trend has been going on, well, basically since its beginning. You could consider, from this point, because that we already made a swing high and we had a downtrend here. So we're talking about from 2022, still we are in this uptrend that is intact. Let's go back to the monthly time frame. So what I see is we do have a structure that was created. It doesn't mean that the market is necessarily going to reverse, but it does tell you that the market is at least decelerating because it's creating bearish structures, and that is the the engulfings we see on the monthly. But just the fact that it indicated one item doesn't make it bearish necessarily, right? It can be just one in many signals that it's throwing out. So it's important to consider everything else, right? So, and the market structure is bullish. Obviously, you can see the impulses are to the upside. The consolidations are not very deep. Even this one isn't that deep compared to that impulse we had here. And what I mean is that is the impulse. That is the impulse, and that the retrace. You can see the retrace is quite healthy. It's nothing telling us of weakness necessarily. It's very healthy for price to continue to move higher. We did create that bullish order block. Bearish order block on the monthly, and that will probably cause some kind of retrace. But it may not be even that much, right? It could be that we get lower or not. It doesn't have to always. If the market switches back to bullish very strongly, there will not be any reaction to that structure, and it just breaks it. It actually uses everyone that bought into or actually sold into this structure as fuel for that breakout, right? Because you can't have a breakout if you don't have a resistance, right? The breakout by definition is the breaking of a resistance, and this order block will then function as that resistance. Everyone thinking, all right, this is going to be the top for the time being. I'm going to put my stops above. I'm going to be entering shorts. They are the ones that when they get into that pain area, they're going to be selling or going to be stopped out. And that's going to be the fuel, at least from one part, for prices to really break through and reach much, much higher. That's why you see that it's very violent when these breakouts happen. Because both sides of the market tend to do the same. The sellers want to get out of their position, so they need to cover, need to buy back the the position, and the buyers, they see the breakout, they're sniffing blood, they want to go in. Not literally blood. This is all nice. All right, so just the higher time frames, we do have that area there, that supply area, but I don't see any weakness. And that's a very peculiar thing to talk about, because we do have that monthly, but look at the weekly. Does the weekly tell us any weakness here? Since the time it created a structure and came back, nothing. Very large body, nothing there. Even continues impulsively within the supply area. That tells you something. It stops a little bit. Another relatively big candle, and even it doesn't show here on the weekly, but on the daily, it closes above that all-time, above the previous all-time high, and it came back, but it couldn't. Look at that. On the weekly basis, it's still holding the structure that created. Look at that. It's still holding that structure, that the candle that created and achieved breaking that, creating that all-time high. That tells to me that's strength, right? I would even expect, even a little reaction would still look quite healthy. I mean, for a supply zone, this wouldn't be too bearish, as long as it doesn't break any structure and it doesn't have anything to break to the left. But this is quite bullish so far. So we don't have any actionable actionable ideas, but it's very, very bullish. That's one thing on the weekly. Let's look at the daily. We had a quasi, with this being the neckline and this being the head, and an entry order block, and you can clearly see that the market did react initially from this first few days. It got into that order block. It had a little move. That's the initial reaction, but that was very short-lived, and very clearly that it broke. So basically, it's breaking a daily quasi, invalidating that daily quasi with that close. Look at that close above the head. That's a definition, the one that we were just talking about systematic trading. You have a pattern on one time frame where the head is. It's a very precise, objective level, and you have a close that is above that. To me, I consider that reversal pattern to be invalidated, just the fact because it closes above. So you're breaking. We have the bearish reversal breaking down. To me, that's another indication that the market is strong and is likely to continue. And let's see where it's reacting from. Right, from that push that created that all-time high. What does it do? Typically, of course, it can continue. It can create new structure, or it can retrace back into some demand area and then continue. I don't know what the future holds for us. Where's the last demand from this all-time high that was put in? Right, that's the demand right there, and it comes back into it. And look at that reaction. It's too early to say anything. Actually, I think that's the demand area with some precision here. That's where it comes back, and it looks. We don't know the future. I don't have a crystal ball, but it looks like the market is getting ready for a possible continuation to obviously to the upside. Most likely at some point making higher highs, even taking that all-time high. And I have no idea where it is going to go in terms of projected targets, because I haven't done any analysis on that. This is just price action from what we see. I think it's looking quite healthily. And if we go lower time frame for those who are trading perhaps intraday, let's see if we can get a quasi. On the H4, there isn't a quasi. The neckline is here. Let me mark that as an H4 quasi. We go, just that reason already tells me that I'm not going to be trading, getting an entry. And if you go to the H2, I can find a neckline being broken right here, but I would be entering in this area if and when it comes back. Also, I like it because it is, as you can see, you have that daily order block, not the freshest one, but the one before that, where it can come back and have that reaction. So I would be eager to take a long if I were to look for a trade in Bitcoin. Probably put my stop below that low and just run it, either that order block or that high, or even have a a portion for that all-time high to just hold on, because Bitcoin is very bullish, as we said. That's the analysis, or that's the breakdown for what I see in Bitcoin. Looks strong, it's holding up, and it's just interacting with some daily demand area. Possibly we could see some push in the next couple of candles, but we have in 60 minutes, 14 and 50 seconds, news coming in. What news is that again? That is the job openings, the JOLTS, and that's a high impact news on dollar. Meaning, if you have a high stake account, you got to watch out with your entries 2 minutes before and 2 minutes after, so that your profits, they do count. It will not invalidate your account, but it will the profits will not count if you do it in that 4 minute window. All right, that was Bitcoin.
Victor? Just some additional insight in terms of BTC USD there. In terms of certain levels, as long as Bitcoin can hold between 95 and the 90,000 level for the immediate term, let's say the next month or two, a very good chance we could see new 52-week highs. That's the first thing. Two other things just to bear in mind as a trader, because of that analysis. Expect two potential things, or be prepared for two things. Number one, we could see Bitcoin really pushing higher and very fast, or alternatively, we could actually see a bit of a consolidation, a little bit of a consolidate the gains, set a bit of a base. So don't be too disheartened. Some traders, when we analyze, they think the move is going to happen exactly now. It could. Or alternatively, it's also very positive, where actually Bitcoin consolidates. Lower volatility, then that will follow higher volatility. So we had some high volatility of late, so that volatility could then just go into a low period, just to consolidate, and then start to push push higher. And when it does, we could see quite dramatic moves.
Yes, what are the levels you mentioned? 95
between. The intermediate level is about 95 to 90,000. That's basically just below at that low. The 95,000 is just below a low that's been created of late, and then the 90,000 just at the prior significant high when it was in that range there. That's it. You've got your blue mark in there. So I would say it needs to hold above. If Bitcoin gets below those levels for whatever reason, for whatever catalyst, then we could see a large range or large pattern. And if that's the case, we could even see a broadening formation forming, which is going to be quite wild. But let's see how Bitcoin unfolds.
Actually, from the recent low and the all-time high, we have the 50% retracement at 93, which is almost squarely in between that range you mentioned, from 90 to 95 dollar per Bitcoin, which makes a lot of sense, right? This is a very healthy retracement, 50% in a bullish run, where you have it coming back, and before it continues, right? So it's
and then last thing on it, just to mention, if we make a new 52-week high, if I'm not mistaken, we're also going to be in uncharted territory for Bitcoin. So certain things, when you get a symbol, an instrument that hits uncharted territory, don't, in terms of your analysis, don't be too specific about where that target might be. So move or prioritize more of a reward to risk ratio for your TPs, etc. Because it's uncharted territory. There'll be so many different views of where Bitcoin can get to, and it's not a guarantee. But just be aware of that when you're dealing with uncharted territory.
Exactly, that's exactly right. Because there's no point of reference, there's no level, no structure. We only have projections from earlier moves and structures. But projections, by definitions, are not defined, are not precise, and that's totally correct, Ashley, to point that out. Not only that, I think projections. What I would also add is when you have projections that are out in the unknown or the recent unknown. In this case, it's completely unknown, uncharted, levels for Bitcoin. You have that on Forex as well. When you're projecting into a place where you don't have any immediate structure, it's better to not move your TPs, right? Have a TPs by the beginning. You do your analysis, as Ashley mentioned, multiples of perhaps some risk, of some pattern, the ranges, or perhaps you use earlier impulsive movements like legs, the length of legs, and then you can at least go for 50% of the previous length, or maybe a little bit higher, depending on how strong you think and what phase of the the bull cycle we are. But don't change them, right? Because if you keep on changing them, you're never going to take your TP until it's already too late, and there's no chance for you. You end up giving back a big deal, and hopefully not more than you risked. Not more than you risk, but I mean, goes back into the move is completely gone, and you're getting out at break even, or even worse, with a little bit of loss. So it's always important to, if you have those projections, to stick to them. And if you're not sure, there are projections, take partials along the way, right? A quarter, a half, and 3/4 of whatever target you're going. If the projected levels are too far away, there's nothing wrong with taking some profits. It's going to do your psychology a lot of good.
And if I can add just one last thing, this could be a classic example, what I mentioned earlier, to put into practice what I mentioned earlier. Whatever strategy you deploying for Bitcoin, what you could do is take multiple trades. What I mean by that, you should take a trade and you manage it according to whatever strategy that you choose and you're doing. But you could also enter another trade, have no TP, just a stop, and trail that stop however aggressive or relaxed you wanted to. And you could surprise yourself. You could be in Bitcoin for quite a bit of a run. So also have that humility. So that's another way to do it, meaning that the one trade serves a purpose where it's according to your strategy, and you've got data there to reference. The other one's like, okay, could it really give you a higher reward than what you even could think of? And that's where the humility comes in. Just manage the risk. So I have no TP, uncharted territory. Let's see where it can go. And you just manage.
Exactly. You mentioned something, Ashley. You said trail the trade. And one question that comes to mind right away, like when you say trail, I have a couple of ideas how I want to do that. However, what do you say to someone who doesn't know how to trail their trades? They've put in a Bitcoin and it's going their way, and they don't have idea where to take profit. They want to trail it, as Ashley said on the most popular stream of trading on YouTube, and they say, I want to trail it. What do you give them as starting steps? As what are some basic idea for trailing an open trade?
Okay, so I'm going to start with the default. The most default, and when I mention default, as always the go-to for trailing. However, there is certain equipment you need. So I'm going to split into two areas. So if you've got either your terminal, your computer always on with power and internet, or you got a VPS, you actually just use the trailing function on MetaTrader. Basically, what that is that whatever your stop loss distance is, it will trail it according to that level. Meaning that if you've got 100 pip stop and the trade goes 1 pip in your favor, from your entry to stop loss, now it's not 100 pips, it's 99. So the stop loss will always be ratcheting up as the trade moves in your favor. If the trade starts to go against you, it keeps that stop wherever it's the highest is reached. So that's what I would say is the default. Why? 2 reasons. One, it's the most efficient. You activate it once and you leave it alone, kind of to get your mind into that mindset. That's number one. However, another way to do it is what you could do, depending on the strategy and depending on the time frames. You could adjust the stop according to the time frame and a candle's high or low, if you're going long or short, just below a candle's high or low, or even a moving average. But that requires that discipline to keep on moving it, and don't hesitate. Never ever hesitate with if you've decided you want to trail it, never hesitate to say, I'm not going to move it this time when it's supposed to move. Execute it accordingly. So those are the two defaults for a manual way and an automated way. So, and then there are so many different ways according to the strategy that you can trail a stop. You could, if a trade moves by X percentage or X reward risk ratio in a favor, then you could move your stop to break even and keep it there. And so the trade only comes out at break even in worst case scenario until it hits either TP or you manually close out for profit. For another example in terms of a trailing is you can initially have a stop, and then at a certain point, at a certain condition, you then remove the stop, and then you have either an exit and a stop, or you allow it to take out on a certain percentage of profit. That's what you can do as well. So there's many ways to execute that, but the default, if you haven't, always allow, if you can, the system to trail for you, because that way it'll be disciplined. You won't have any hesitation, and you know that the data you'll collect and you understand will be reflective. It's consistent. That's my recommendation.
Awesome. So you mentioned the first one was from the platform, a fixed distance from. Actually, as you were talking about that, meaning that if price, it looks at the fixed distance from current price, and whenever that distance becomes bigger, it automatically moves that stop off the stop loss level to that fixed level, that fixed distance again from current level. So as price goes in your favor, you're constantly at at most whatever fixed number you decided, that's going to be the highest, the most profit you're giving back. That's how you let the market breathe as it goes in your favor. That's the fixed distance. And you mentioned another one, which was a very popular one, which is based on the last previous swing low. Is that correct? Or the candle? I think you mentioned candle, not swing low.
Yes, it can be a candle. It can be a line chart where it's a close, high, and low. So it depends on the strategy. But the principles are there. Is that if you notice the principles, you move the stop always in your favor, never out of your favor. So if the trade's moving in your favor, you move it according to whatever measurement. And if the trade moves against you, you keep that stop there. That's the key principle. It's a ratcheting system. It only goes one way.
Exactly. And the other way is the swing low or candle. Whenever you make a new swing low, a higher swing low, you move your stop loss a little bit below that, and you keep doing that. That's this is something very useful. Because you let the market tell you when to move the stop loss by its market structure, right? So it's by the swing, by the way it's every time it takes out that high, meaning at this point you know that this is the stop that needs, this is the level. Whenever the new high becomes let me mark it again. The new high becomes then the trigger for moving the stop up again next time, right? So you have this, right? Whenever price comes in this area, right? Like so, as long as whenever you're still here, your stop loss is still here. Let me move this away, right? So that is your stop loss. Price makes a new high, a higher high. You're still not moving your stop loss. It goes into against the trend. Has a little counter trend, little retrace, and it pushes over and takes out that high. Then now this becomes your previous swing low, and you can apply this to and that's why I said X swing low. It could be 2 swing lows points after behind, not the last one. Just you can play with that, and by playing with that, you're playing with the sensitivity of your trail, right? If you do it too sensitive, you're gonna be stopped out, with very little retrace. And if you too coarse, it's you're not moving your stop loss adequately, and you're leaving too much money on the table. It's always a balance. You're never going to do it perfectly, but you keep on doing this. Every time it makes a new high, you move it to the last swing low, right? It makes a new high here, In this case, you move it to that, and so on consecutively. I think it's a nice concept. A lot of times we forget that there's a lot of traders. I know this trailing concept is something perhaps, I assume, a lot of traders already know about, because they've been in the market for some time. But I too sometimes make that mistake I forget that there's a lot of new traders coming to the market that also need to get the basics, because trailing is sort of the basics. It's not the most complicated or advanced concept, but very foundational ways to manage your open positions. I hope for everyone that's clear. I'm gonna leave it just a little bit, just for people to watch in the last 30 minutes or so. We have 30 seconds we have before the news. Actually, let's go to the news, because that's going to be the last few minutes we have. Let's look at the jolt openings effect on EU. We have a little quasi in there, a little reversal. You can see how the trend, speaking about what we talked about, the trend is to the downside, right? You have lower lows, lower highs, and then we start breaking that trend with higher highs, and possibly we don't have that higher low yet, but maybe there's that reaction. Jolts, jobs opening, dollar favorable for dollar, prices making some nice moves. And let's check the chat before we close our session for today. Ashley, let's see how our great friends in our chat are doing.
I think there's been a request for euro dollar and cable dollar, but I don't think we have time. So I'm sure we'll get that. The viewers can come back tomorrow with the live stream.
Yes, thank you. That's indeed right, Ashley. We don't have, especially when I speak about myself, when I do a market breakdown, it can easily go into 5-10 minutes on just one asset. So the best thing to do is come back. I'm not going away. We're not going away. We are a prop firm. We're here for the long haul. Actually, just look at our track record. We are pioneers in the industry, and we're not. That's a fact. So that tells you that tomorrow we're going to be here still. In many years to come, decades, if it's up to us. So we're come back, and I'll do that EU breakdown gladly. Whoever asked me the request, I don't have the names, but that's fine. Or if you have access to our Discord community, in about 44 minutes, I'm gonna have a workshop where we'll come together and talk about everything trading related, and there I do regular market breakdowns. We talk about everything that is relevant for us as traders, with a coffee in our hands, relaxed, and enjoying the price action we see. So that's an open invitation for everyone. Join our Discord community. The server, you can get access through the hub. Just buy any account, and in our hub you will find a link, an entry link for our Discord service. I don't know if this helps, but just for today on Discord, I will not have a mask on. If you want to have a session where I'm not going to have a mask on, is going to be today. No mask on. That's a promise. 100% certain. No mask on.
The unmasked trader.
All right, Ashley. It's always a pleasure spending time with you and talking about time flies when we talk about trading. As traders, we don't need in advance to have a topic to talk about. We just start talking, and things flow. I like that, Ashley, and that speaks volume about your passion as well. So thank you for your for everything you do for our community. On behalf of them, we would like to thank you, Ashley. You are a great asset for our team. I would like to invite everyone to hit the like button if you like our content. Don't forget, we have competition going in. Tomorrow is the starting date. I think today you can still, I'm not sure if tomorrow you can still get into the competition. But then don't let that be, pass you by. It's an opportunity to win some prizes. And subscribe to our channel. Subscribe. And our next goal is, I'm not sure we have a milestone, but to me, it's going to be 80, 90, 100. And we don't have any milestones, any stopping inside. We're not stopping. So we are the juggernaut of our industry. So if you want to be part of it, join us. Ashley, thank you once again. Everyone, see you tomorrow. And otherwise, I'll see you next in our next session on the workshop on the Discord. Thank you. And
thank you, Victor.
Bye-bye.
Bye-bye, everyone.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.